Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, 600. Today, 100, and we see it going down to 50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As they said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP. And I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is an update for the Dow. The S&P and NASDAQ stocks are higher as recent economic data eases concerns that inflation is too hot to be tamed. Also, two Federal Reserve officials are maintaining their hawkish stance. The S&P 500 and the tech-heavy NASDAQ 100 up for the fourth straight day. And commodities ranging from oil to copper are jumping as the dollar retreats for the first time in 5 days. So here's where we stand. The S&P 500 index up now by 52 points. That is a gain of 1.35%. The Dow's up 277 points, a gain right now of 0.9%. NASDAQ is rallying 251 points, up 2.2%. The NASDAQ 100 index is up 2.1%, while the Russell 2000 is advancing now by 2.52%. The 10-year yield 3.00%. The 2-year yield 3.03%. Spot gold up $1.74 the ounce to $17.40, a gain there of 0.1%. West Texas Intermediate crude rallying now by 5%, $103.50 for a barrel of WTI. Well, as for the market backdrop and the economic backdrop, Emily Rowland is with JH Investments.
We've got earnings season starting next week. We think there's going to be a big challenge here to profit margins as we move through. It's going to be really challenging given higher input costs, higher interest costs, higher labor costs. So a lot of big catalysts in the market coming up over the next couple of weeks. We wouldn't get too comfortable. There's been a lot of people that seem to be kind of not paying a lot of attention to the inverted yield curve, which re-inverted over the last couple of days. We know that typically precedes a recession, so don't get too comfortable here.
And again, that 10-year 3%, the 2-year 3.03%. An update, I'm Charlie Pellet, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio. We are streaming on YouTube. We are also live in the BTV5 studio. Carol Massar, Tim Stenovic. Actually, we're back together again, finally.
Yeah, for the first time in a long time. This wasn't supposed to be, but it is.
Oh, my God, guys. It's been a crazy couple of weeks. And as you know, the news flow, personally, it's been crazy for both of us. But we're going to get into a lot because so much for the lazy days of summer because the global news flow continues. Boris Johnson.
All right, we're working to get Carol Massar back right now. In the meantime, let's bring in our colleagues here in the Bloomberg Interactive Brokers studio. Joining me is Bloomberg News International Economics and Policy Correspondent Michael McKee. Also with us is Bloomberg Markets Correspondent Kriti Gupta.
1, 2, 3.
I want to start with you. It's good to, Carol, I think we have you back. We're going to start with Kriti, and we're going to bring her in just to give us an idea of what's going on with the trade today, Kriti. We got an outperformance on the NASDAQ, the S&P up by 1.4%. And hey, oil, it's just rallying.
It's just rallying, but hey, take a look at this volume here. I mean, if you're looking at it from a 5-day point of view, extremely light volume. The S&P 500 volume down about 10%. If you actually look across the Atlantic, though, you'll see a very similar story. Green across the screen, across the continent, with a lot of heavy volume. So it's interesting to see that kind of dynamic where obviously Europe dealing with a lot of politics, but you do still see a bid into those markets. Perhaps the United States following suit in that regard, but less volume. And I think it's just because there's really no one here. Or it could simply be this idea that everyone's waiting for the payrolls report tomorrow.
Yeah,
that old thing?
That little thing.
I have to say, driving in this morning, there was nobody on the streets. I kind of just flew right in. So Michael McKee, come on in. We got another read on the labor market. We got jobless claims, as we do always on a Thursday. What did that maybe tell us about what's going on in the labor market and what we might get tomorrow?
Well, not much. The problem with the jobless claims, we're going to be watching it closely. It's a kind of a canary in the coal mine about the health of the labor market, but it moves very slowly. If it were to move dramatically, then we'd have something to worry about. It went up by 4,000, which is not a lot, and we're at historically low levels. So even though the trend has been up, who's to say this is not where we're supposed to be right now? Because we're at these levels that are so low, it's hard to put it in a historical context. So we keep watching that. That's something, but the JOLTS numbers that came out yesterday showed we're still over 11 million unfilled jobs, and we're expecting 265,000 jobs were created or restored, I guess is the accurate way to put it, in June, which prior to the pandemic would have been thought of as a fabulously big number. Right now, it just suggests that we're slowing, and then the question is it because companies aren't hiring or because they can't find workers? So it's kind of hard to get a read on the labor market change. We know the labor market is healthy right now.
Is it healthy though because of the JOLTS numbers? Or is it healthy because we're set to add 200,000 tomorrow? And I ask this in the context of, everybody out there saying having concerns about a recession, and me in the back of my head thinking, wait a second, how could we be in a recession right now when we are adding on average 500,000 jobs every single month in 2022?
You sound like a member of the Federal Reserve. That's their argument. And there is an opening, so if they view it the same way.
Mike.
No wonder
they're
he's
all
so
in the
well
terminal.
dressed.
They can just send me an IB.
He was gone for a few days. Maybe he was down
Interviewing.
Jay
Yeah.
Powell, how is
I
he?
bet.
The Fed is looking at the unemployment rate. It's historically somewhat correlated as a somewhat coincident indicator with the state of the economy and the labor market, and it is below what they think of as full employment, and they think it's somewhere in the mid-4s. So if you go over 4% even, you're not getting into a weak labor market yet. So the Fed is at this point not particularly concerned about it, and they're more concerned with whether we see the participation rate keep rising, more people coming in, and we can close that 11 million job gap. Now, a lot of people say the 11 million isn't real, that it double counts some jobs, and companies may have posted jobs, but then they're not taking them down once they're filling them, or they're not going to hire and fill those jobs. But it's still an enormous amount of openings. We're about 2 million, no. We're 800,000, I did the math today, 820,000 jobs below where we were in February of 2020 when the pandemic started. So we won't make it up this month, but close. But we're about 7 million below where we should be. So there's still a lot of room.
So, Creedy, you talked about a lack of volume, so lack of conviction on an up day. That's significant, the technicians would say?
I would say it's significant. I'd also say that if you're kind of waiting for the payrolls report to be that catalyst in one direction or the other, it might actually not be. I think there's a lot of focus on the payrolls report for obvious reasons that Mike just pointed out. But I think from a trading point of view, there's other pieces of data that are perhaps more important. The CPI data, is the peak in the rearview mirror or not? That's more important. I think even the jobless claims today are even more important in this era of the traditional recessionary dashboard isn't flagging the normal signs that it would. So I think in that context, the payrolls report might not see as much of a market reaction as we've seen maybe even a year ago.
I think only if we get a weak report. If we get a weak report,
like how weak, like a big miss to the downside?
Big miss to the downside, then people in the markets are going to go, oh, recession, and then they start questioning what the Fed's going to do. Right. We had Chris Waller and Jim Bullard this afternoon saying we're still on 75 track. So if we get a strong report, if we get a as expected track, not much changes.
Okay, but what if it's really weak? Then perhaps they'll only do 25 basis points, maybe, and the market might think that.
Well, the market might think that at least until next Wednesday.
At least till next Wednesday.
Then we get the CPI report.
Don't you feel like we're living Groundhog Day from week to week?
See, I was on the market show today, and their question of the day was, which asset class is doing the best?
I was
there. I said options.
It was a good answer.
Because, the only thing we know for sure is we have volatility.
Yeah, that's exactly right. That's a really good point. All right, guys, lots to certainly cover over the next few hours, but a great setup for us on this Friday's Eve, on this jobs market eve as well. Of course, our thanks to Michael McKee. He is international economics and policy correspondent at Bloomberg News, joining us along with Kriti Gupta, markets correspondent right here at Bloomberg.
Well, let's go down to Washington, D.C. now for a check of the latest world and national news. For that, we turn to Nancy Lyons. Hey there, Nance.
Thanks, Tim. British Prime Minister Boris Johnson has given in to the pressure and has resigned. He made a brief statement earlier today outside 10 Downing Street, blaming the, quote, herd instinct in Westminster for his departure.
It is clearly now the will of the Parliamentary Conservative Party that there should be a new leader of that party and therefore a new Prime Minister. And I've agreed with Sir Graham Brady, the chairman of our backbench MPs, that the process of choosing that new leader should begin now.
Johnson's resignation brings the curtain down on a tempestuous 3 years in office that were marred by a succession of scandals that culminated in the rebellion of his own cabinet and parliamentary group. In Russia today, American basketball star Brittany Griner pleaded guilty to carrying cannabis oil. She was arrested in a Moscow airport in February, and authorities said she was carrying 2 vape cartridges. Alexander Boykov is her attorney.
She's a responsible person, and she admitted that it was hers, but she said that it was unintentionally brought to Russia.
Boykov says they're hoping for a more lenient sentence than the suggested 10 years. Macho leading man James Caan has died at the age of 82. One of his most iconic roles was as hot-headed Sonny Corleone in The Godfather.
What do you think this is, the Army where you shoot them a mile away? You got to get up close like this. Bada bing, you blow their brains all over your nice Ivy League suit.
That role earned him an Oscar nomination. There are few other details on Caan's death. That was announced on his Twitter feed. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom. Carol Massar, Tim Stenovic, back together again on Bloomberg Business Week. Can we just want to share with all of you, because it's been a crazy couple of weeks for both of us. Both of us dealing with COVID either personally, directly, or among our families.
Yeah, I mean, it just speaks to the power of how disruptive this thing continues to be. This is the BA5
But COVID's over,
subvariant.
Tim.
Well, I think, BA5 subvariant is really what my own personal thesis is, because something's spreading very quickly right now. Not just anecdotally, but we're seeing it in the positivity rates here in New York City and around the country. But I have a son who's under 5 years old. He's not fully vaccinated yet. And if he got it, and he's totally fine, but he's basically radioactive for 10 days. So he can't go to school, he can't go to camp, he can't be around other babysitters. So that made it really tough on us. My wife had COVID as well, so I was solo parenting. But it just speaks to how disruptive this still is. And, we're gratefully, all of us are okay, which is the priority.
Well, and that's what we think about, right? And this is where we've learned so much about this virus and how to treat it. My own personal case, I've had back-to-back COVID. I took Paxlovid on my first round, which made a really big difference, and I started feeling better. I was back at work last week, and then Thursday, especially late Thursday, started feeling pretty lousy again, and then had 2 to 3 days of just back in bed. A little bit of a different symptoms, but it was definitely more of another round of COVID. And they've talked about this COVID rebound with Paxlovid. I didn't end up in a hospital. I'm breathing. I'm back at work. But it's just a reminder, that we've all been talking about it, that this is just kind of our society. And it makes me wonder what fall's going to be like, winter. Will there be another round of vaccines? Yeah. And it's just part of our world. But it's going to lead to impacts on all of us and maybe slowdowns in our world.
I was thinking about the seasonality of this as well, Carol, because it's summer here in the U.S. and it is warm here in the U.S. And think about where we were a year ago. Cases were so low, 4th of July 2021. This year, so much higher.
Yeah, exactly. And it's interesting because we're not doing the testing, I think, across the society. And so, the numbers aren't being mapped so well. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The S&P 500 index is up for a fourth straight day, while the tech-heavy NASDAQ 100 rose more than 2%. The 2- and 10-year Treasury yield curve remains inverted for a third day, even as Fed Governor Christopher Waller downplays the recession signal this sends. Stocks rose as recent economic data eased concerns that inflation is too hot to be tamed. Right now, the S&P 500 index is up 55 points, up 1.4%, 3,900 even right now on the S&P. The Dow's up 296, higher by just about 1%. NASDAQ up 258, up by 2.3%. Again, the 10-year right now 3%. We've got the 2-year 3.04%, while spot gold is up $1 the ounce to $17.39, up by about 1/10%. West Texas Intermediate crude is rallying 4.7%, $103.20 for a barrel of WTI. Recapping, a Thursday rally underway with the S&P up 54, up 1.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed a Thursday rally. All right, Charlie, thank you so much. Well, two of our most read stories on the Bloomberg today, of course, one has to do with Boris Johnson calling it quits, announcing his intention to resign as UK Prime Minister. And then, Tim, we've got China mulling over a massive $220 billion stimulus package. There is a lot going on globally.
Fortunately, we have a great voice joining us this afternoon, or evening for her. Stephanie Flanders is Senior Executive Editor for Economics and Government at Bloomberg News. Stephanie joins us this evening on the phone from our London bureau. Stephanie, I want to start with just the huge news that a lot of Americans woke up to. 7:30 this morning, Wall Street time, we heard from Boris Johnson that he is indeed resigning. We've had a few hours to think about this. I'm curious about the economic angle here and what it means for not just the UK economy, but the broader economic picture as well.
Well, I think it's certainly, it's a time when the UK economy is facing enormous economic challenges, and every country is facing issues with inflation and the risk of stagflation, but it's particularly bad in the UK because we're kind of squeezed on all sides. We've got a big rise in energy prices because we don't have a lot of our own energy, but we've also got a hot labor market like the US. And everything that goes with that. So the government was already looking at a pretty difficult situation, and just the prospect of a lot of uncertainty over the next few months as we work out who's going to be the next prime minister and do they have a different economic policy. As you know, that's never good news for markets, and it's not going to make any of these economic challenges any easier.
What does it mean, Stephanie, or what's the conversations around who it might mean ends up taking Boris Johnson's place and becomes the next prime minister? And then there's an election, right, within a year or so right after that.
Yeah, we probably have a few years before the election, or a couple of years before the election, depending on what the next prime minister decides. I think the interest, it's very hard to say at this point. Most of the main candidates are not people who have, a long record of involvement in economic policy, or what you would consider to be kind of strong instincts that we know about on economic policy. Obviously, the exception to that is Rishi Sunak, who until just a few days ago was the Chancellor of the Exchequer, the finance minister, and he is perceived to have been sort of fighting the fight for more sort of fiscal conservatism, not spending as much as Boris wanted to spend, and he's also been responsible for quite a lot of tax rises. So I think with everybody else, there's a feeling that maybe the government spending will be a bit stronger and borrowing will be a bit higher. But I would say that's kind of a marginal call. It's not going to change the fundamental picture, which is that we are threading a needle to avoid recession, and we may not succeed.
What do we know about the new Chancellor of the Exchequer, Nadhim Zahawi?
Well, he's new. He's there for the moment. Who knows how long he's going to be there.
It's been like 48 hours at this point, Stephanie.
And he also had sort of said he'd resign and then not resign, and so it's a pretty movable government at the moment. Look, I think he has suggested that he was going to be closer to Boris's instincts in this sort of slight tussle between Rishi Sunak, the old Chancellor, and Boris. So the perception was that there would be slightly looser fiscal policy. But as I say, I think the thing for markets and for the question marks for the economy is more like who's going to be running the show. I mean, there's some quite big decisions to be taken. There's enormous government decisions to be made on how much teachers are paid, for example. Are they going to get the kind of pay rise that would match the nearly 10% inflation rate that we currently have? It's going to cost a lot of money. How are they going to pay for it? All those decisions have to be taken in the next few months. And at the moment, for example, until this morning anyway, there was no ministers in the education department to make that decision.
Pretty remarkable.
Kind of crazy.
Crazy seems to be the watchword for the last couple of years globally. Well, Stephanie, so we watch the UK economy, you watch the UK economy, you watch global economies generally. When I think about important ones, I'm obviously watching the United States, but I'm watching China in particular, and constantly there are new headlines. The latest, and this again is a Bloomberg exclusive, China considering $220 billion in stimulus. They're talking about local bond sales. What's the significance of this?
Well, I mean, it's one of those things that we've seen from China a lot, right? In the past, where they looked like they were going to have an economic slowdown or they weren't going to beat their really high growth targets, they often sort of reached for infrastructure, that lever, that because they still had this capacity to tell all of the state, the governors of all the state provinces, go out and, borrow more and build more roads, do more infrastructure. And, it's a kind of injection into the economy that's probably been less and less effective over the years because there's just already a lot of infrastructure. There's a limit to how many railways you can build and, how efficient that's going to be. There's a particular problem in the last few months where they've tried to be relying on crank up the infrastructure spending to make up for the weakness in the private sector, while at the same time still having a lot of constraints on the economy due to COVID. They have still got this COVID zero policy. So a large part of Shanghai was shut down for a long period. Beijing was under control, lots of other provinces. So they are potentially having local governments to do more infrastructure, bring forward infrastructure borrowing that they would have done next year.
Right.
But it could be slow going because we're only slowly seeing those COVID controls lifting.
Stephanie, forgive me, 20 seconds quickly. Does it feel like things are getting better globally, or we're still in that who knows what's going to be the next 6 months? And just quickly, if you could.
It's difficult. I think we're seeing actually some significant slowdowns in all the economies. So I wouldn't say it's getting better yet, but let's see.
Thank you so much. We know it's late there. We so appreciate you. You're a voice we want to know and get to when it comes to the global economy. Our Stephanie Flanders, she is Senior Executive Editor for Economics and Government at Bloomberg News, joining us from our bureau in London. You are listening and watching Bloomberg Business Week on this Thursday. Carol Massar, Tim Stanovic, and we are Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, everybody. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stenovec. Tim, you know, we're seeing a rally underway. Not great volume, but in terms of some outperformance today, check out the semiconductors.
I know, you grabbed it for your gainers today, and you were too quick, Carol, because I was going to go for it.
I know.
Up 4.8% right now. These are the Philadelphia Semiconductor Index, tracks chip stocks.
Yeah, but what's interesting, there's a story in the terminal that talks about how the supply chain in chips getting harder to trade. So we're going to get into that in just a moment. First up, though, back to the markets and to Charlie Pellet.
Hi, thank you very much. It is an up day, and among some of those widely held chip stocks right now, Intel is up by 3.4%, AMD up 5.7%, NVIDIA rallying now by 5.2%, and that helps explain why we've got the NASDAQ 100 index up 2.2%, the NASDAQ Composite Index up by 2.3%. So the Dow, the S&P, and NASDAQ are all advancing today. Stocks are higher as recent economic data eases concerns that inflation is too hot to be tamed. Also, two Federal Reserve officials are maintaining their hawkish stance. The Dow up 316, up 1%. The S&P up 56, up 1.5%. Again, NASDAQ up 2.3% at or near session highs across the board. 10 years down 19/32. The 10-year yield 2.99%. But look at the 2-year, 3.03%. Spot gold up 0.1%, $17.40 the ounce. West Texas Intermediate crude up 4.2%. Rally there today, 102.65 on WTI. Wall Street's looking ahead to tomorrow morning's jobs report. It is expected to show the U.S. added the fewest jobs in over a year in June, and the unemployment rate held near the lowest in more than 5 decades. Stephanie Aronson is Director of Economic Studies at the Brookings Institution.
Even though maybe there are more opportunities in the labor force now, people have just changed their behavior in a way that is causing them not to look for employment now. It may be over time, if the employment continues to expand, unemployment rate stays low, some of these people will be brought back into the labor force, but that will just take time.
And that number drops 8:30 a.m. Wall Street time tomorrow morning. Complete coverage as you've come to expect over the years. First-class coverage from Bloomberg Radio. Again, crude up 4.3%. Oil stocks rallying today. ExxonMobil up 3.5%. BP up 3.9%. Chevron up 2.1%. EOG Resources up 4%. Pioneer Natural up by 3.3%. And that's a Bloomberg Business Flash.
You know, Charlie, it's good to be an energy stock. I'm just going to say that.
Well, maybe it's better to be in chip stocks, but we'll find out about that in just a moment.
We're going to talk about that. All right, Charlie, thank you so much. Well, yes, the sector I stole for Tim for the top of our 3 p.m. simulcast. It is the semiconductor index, the stocks. We are seeing chip stocks jump today. Samsung Electronics coming out with a better than anticipated jump in revenue, and that really just sent the whole sector booming in the U.S. trade. I mean, it also sent it booming over in the Asia trade overnight.
Yeah, but really interesting commentary coming from our own Ryan Vostelic and Subrat Patnaik, all about the chip supply chain. We've talked so much about it, Carol, and over the last 2 years, how it has been really challenged, not just for automakers, but for anyone who wanted a chip. It's actually getting harder to trade because not all chips are created equal. Ryan Vostelic is equities reporter for Bloomberg News, and he joins us on the phone from Chicago. Ryan, great to have you with us. I want to go back to this idea that not all chips are the same here, because we are starting to see a glut in some types of chips, but others are still hard to come by. Please explain.
Yeah, absolutely. Well, obviously, different chips are used in different types of product categories, and we are seeing differences in demand and supply depending on what level you're looking at and what part of the market and what their use case is. So last week, we had a little bit of a warning sign out of Micron, which talked about slowing demand for issues like computers and smartphones, suggesting maybe a little bit of a weaker demand outlook for memory-related chips in particular. Now, you mentioned before, we just had Samsung come out. Better than expected jump in revenue, so that's a positive sign for this group. So again, some mixed signals there, but this is an area where people are still trying to suss out what does demand look like and so on and so forth. Now, of course, there are other areas we can get into those as well.
I feel like a story like yours, Ryan, is one that really kind of educates us because it reminds us that not all chips are the same. And then it also reminds us that this is when it really turns out that if you're a big buyer of chips, thank you, Apple, you tend to be in a better position. So talk to us a little bit about kind of the specifics, the nuances of the semi-trade.
Yeah, well, sure. I mean, you mentioned that Apple is a huge buyer of chips, especially from Micron and from Qualcomm and from other names like that. Because of the weight it throws around, it has been able to navigate some of these supply chain issues a little bit better than smaller players. Although in its most recent quarterly report, it did kind of come out and suggest that it was seeing a certain amount of headwind from this. And of course, now there's questions about demand and its ability to continue getting supply. So again, very complicated picture in the chip sector. But different areas are seeing perhaps some stronger tailwinds than others right now. It really depends on what the use case is.
Okay, Ryan, let's talk autos here. Help us get an understanding for what's going on in the car industry, specifically here in the United States, because it's still pretty tough to get a new car.
Yeah, absolutely. We just saw GM come out last week talking about chip shortages as being sort of an issue that it's facing. So that is an area where there continues to be extremely strong demand for chips, and there's more and more chips are being put into cars, especially electric vehicles, to monitor all the different kinds of computers and everything that goes on in those cars to make sure that they're operating and finding all the necessary data they need. So that is an area that continues to see very strong demand that impacts companies like Texas Instruments, STM, Infineon, NXP, a few companies like that that are heavily involved in this particular area.
All right, so you've got, you talk about the different chips in your story, smartphones, tablets, computers. We just talked about auto. Tim brought that up. There's data centers, there's AI, artificial intelligence, and then you've also got the chip equipment makers. I almost think about, when I'm reading this story, I think about the energy sector, right? You've got integrated oil companies, you've got the E&P, the exploration production companies, you've got utilities. Like, there's different ways of playing with it. Talk to us about, like, the data center and AI guys or the chip equipment makers. Is that opportunity for investors potentially?
Well, data center is an area that so far seems to be holding up pretty well. Data centers, of course, used in cloud computing and so forth, so it has really major enterprise spending behind it, especially names like Amazon and Microsoft and Alphabet are, of course, the biggest players within the cloud space. So companies like NVIDIA tend to see a lot of demand for these types of products. AMD is another one. Even Micron does have a data center division, which it said was holding up pretty well in contrast to the consumer side of things. So this is an area, so far it's holding well. People I've spoken to said they're really waiting to see whether this continues to hold up. If it doesn't, then that does have some pretty negative implications for what broader economic growth looks like.
Yeah, I feel like, Tim, these are the things like the hedge fund guys, right? They're watching like all these different kind of indicators to give an idea of what comes next.
Exactly. And it's interesting to see, too, we didn't even get a chance to talk about crypto and the decline in interest around crypto, the decline in price around crypto. That has an effect on the chip industry as well because that decreases demand, too.
Do you know the stocks is up more than 6% since last Friday?
I didn't know that. I'll find that out at 3 o'clock, I bet.
Maybe.
Sounds like a good one.
Might be a good sector for the top of that 3 p.m. simulcast. Ryan, thank you so much. Ryan Vostelica, he's equities reporter at Bloomberg News, joining us on the phone from Chicago.
Well, let's go from Chicago now to Washington, D.C. For a check of the latest world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. WNBA star Brittany Griner has admitted guilt in a Russian court today. She's on trial for carrying an illegal substance through the airport. She told the court she was rushing to pack and put vape cartridges in her suitcase, but never intended to break the law. U.S. Embassy spokeswoman Elizabeth Rood says she spoke with Griner today.
Under the circumstances, she is doing well. Most important, I was able to share with Ms. Griner a letter from President Biden, and Ms. Griner was able to read that letter.
Rood says the Biden administration remains committed to getting Griner and all detained Americans back home. The IRS commissioner is asking the Treasury Inspector General to look into the IRS audits of 2 former FBI leaders who were frequent targets of former President Trump. Bloomberg's Nathan Hager has more from Washington.
The New York Times was first to report former FBI Director James Comey was audited in 2019 with the focus on his 2017 tax return. That was the year Comey signed a multi-million-dollar book deal. Comey's successor, Andrew McCabe, was also the subject of an IRS audit in 2021. Former President Trump fired Comey in 2017. McCabe opened an investigation into Trump and his campaign while he was in charge of the Bureau. In a statement, Comey questions whether the audits are political payback. The IRS says it is, quote, ludicrous and and untrue that senior IRS officials would target specific individuals for audits. In Washington, I'm Nathan Hager, Bloomberg Radio.
22-time Grand Slam champion Rafael Nadal is pulling out of Wimbledon after suffering a torn muscle. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic, live on Bloomberg Business Week on Bloomberg Radio and on YouTube. So you know the best performing sector in the S&P 500. There are 11 major industry groups.
Today or this year? Or both?
This year. You know, like it feels like almost every day.
Well, it's today. You know, it has, but it is a difference. It is a difference, Carol, from what we've seen over the last week.
Yeah.
Because we have seen the price of oil fall. But today it's back to its normal, 2021 and 2022 antics being the best performer in the S&P 500. This is an interesting one. It's actually something I plan to talk about in our simulcast this afternoon.
So go ahead.
So it's interesting because we have seen a decline in the price of oil over the last few days, largely over concerns about a potential global slowdown. If oil, the demand for oil will fall if there is a global economic slowdown, so the price is coming down accordingly. At least that's what some observers say. We're seeing something different today. In fact, we're seeing two things at play here. One is the story that we talked about a little earlier with Stephanie Flanders, the big stimulus in China, which could actually increase. China is the #1 importer of oil in the world, so that could increase demand for oil. And then you have this CPC terminal, and it's a Russian court order halting oil loadings from a port in the Black Sea. This has unnerved European crude traders who are already reeling from the tightest regional market in years, sending prices for competing barrels spiraling.
Yeah, so this goes into global supply, right, specifically.
Exactly.
And so then you will ultimately see it play out in terms of global oil prices. You do see WTI crude up more than 4% in today's trade, and so we do see some reaction. And you watch things like Brent for the more global view on oil prices. You know what's interesting, too, though? We've seen some relief at the pump. There's another story on the Bloomberg that sees, for at least American drivers, there's a bit of relief in store at the pump. Average national price, retail price has fallen for 23 straight days, according to AAA. But you do wonder globally about oil prices and if we stay at these levels, because, what will be the ultimate impact on usage rates? Because we're going to talk about demand destruction a little bit in our next segment. So this just is another thing that strains the global energy markets. So we'll get to this in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are pushing higher. The Dow, the S&P, NASDAQ 100 index, all holding close to session highs. The recent economic data is easing concerns that inflation is too hot to be tamed. Also today, we've got two Federal Reserve officials maintaining their hawkish stance. S&P 500 up today for a fourth straight session. Up now by 53 points, a gain of 1.4%. Dow Industrials up 298, up by 1%. NASDAQ up 246, a gain there of 2.2%. Again, the 10-year 3.00%, two-year yield 3.03%. Spot gold higher, little changed, up $1.66 the ounce to $17.40, up by about 0.1%. Crude, though, big story. We're watching energy move higher today. West Texas Intermediate crude up 4.2% right now, 102.71 a barrel. Again, recapping, S&P up 53, up 1.4%. I'm Charlie Pelleton. That is a base date, actually a Bloomberg Business Flash.
Yes, it is. All right, Charlie, thank you so much. Carol Massar, Tim Stenovec, live here on Bloomberg Business Week. Well, demand destruction, anyone? Because this story is definitely a sign of the times as surging power bills are forcing the U.S. industrial complex to slow down. Tim, this is a story you will find on the Bloomberg terminal, online at Bloomberg.com/businessweek. It really just speaks to so much of what's going on, and I feel like what we just talked about for some of our audience.
High energy prices,
yes.
the bane of industrial production. Joe Doe writes all about it along with Noreen Malik. Carol, as you mentioned, you can find this story at Bloomberg.com/businessweek. Joe Doe is Metals and Agriculture America's deputy team leader for Bloomberg News. He joins us this afternoon. Also with us is Joel Weber, the editor of Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. This is remarkable, Joel. At one plant here in the U.S., the electricity bills have tripled in recent months, and as a result, they've had to idle the plant.
And more than one plant. This is going to have, and this is going to be a story that I think we're going to continue to talk about. I mean, look, like the world is obsessed with the energy story right now. We've seen it just kind of devastate Europe. And what really got us interested in this story by Joe and Noreen was that some of these early signs are starting to show up here that the surging costs of electricity are going to kind of break America's industrial complex and that factory might that makes America hum. So Joe, what are we wrestling with here, and what are those factories and manufacturers looking at?
Yeah, I think it's the first time the United States is seeing a power crunch itself, right? Europe, obviously, it hit very early on with Russia's invasion of Ukraine and then the spread into Asia. And for months now, our European colleagues have been calling us on the commodities desk here in the United States saying, aren't you guys seeing similar problems for your steel mills and for your aluminum mills and all the other manufacturing facilities? And we kept saying, no, it's just not happening. Well, when Century Aluminum, which is the second largest U.S. aluminum producer in the United States, just a few weeks ago announced that they were closing down their largest facility due to power costs, Noreen and I got on a call and said, what are we missing here? And so this is ultimately what became this story. And she had been learning already previously that a lot of manufacturers across the Midwest were complaining about their power costs. They weren't shutting down necessarily, but they were worried they were going to have to throttle things back in the summer. And of course, what our story goes into is that not only are they feeling these, but they are actually, you are starting to see some shuttering of manufacturing production across the U.S., including one source telling me that 2 finishing facilities for steelmakers have already had to cut back on production because they need to cut in some places so they can continue to do, their main work.
Joe, what I love about your story is I learn about within the industrial complex here in the United States, kind of how it all works, and especially when you're, tapping into utilities and power. I mean, facilities have to pay for something, as you lay out, something known as capacity. So in other words, they kind of need to keep things functioning even if they don't need to use it.
Yeah, it's the way we describe it is an insurance policy. So if you're a big factory, or let's say you're a utility, right, and you need to make sure that in the middle of August, the entire city of New York has enough power to turn on all of their air conditionings on a 100-degree humid day. Well, you have to pay ahead of time to make sure that that capacity will be there if you need it. And what we're finding, because the grid is aging, because we've been phasing out old fossil fuel plants, because of the war between Russia and Ukraine, all of these things are converging in pushing up the costs even of the capacity. So you combine the capacity, which is an insurance that you sometimes need, but sometimes you don't need, and you add that with what you're actually paying per kilowatt hour, and it's really just stressing these companies.
And I'm curious here, Joe. Like, when are we going to know how bad this gets? Like, we're early right now, right? Like, how bad could this get?
So the forecast that we had pointed out, which was a government forecast, said the worst is yet to come, and it's probably going to come here in the third quarter, towards the end of the summer, as obviously power use goes up to its highs, and it's going to hit a high of all time. This is something I was just discussing earlier with Bloomberg Television, which is, well, what does that mean, right? And I think we're going to be paying very close attention to earnings in the next coming weeks for the big manufacturing companies, in which they'll tell us, all they've said all year is that demand is good and order books remain healthy. But we're actually starting to see economic data show a bit of a slowdown in the economy. Obviously, GDP was negative. And it's going to start, the question will come up from analysts. Well, what about your power contracts? Are those starting to be a problem for you? Does that mean you're going to have to shut down? And are you getting it on the other end, which is demand? And, listen, I'm not saying that it's for sure, right? Things could turn and maybe suddenly things improve. But right now, it's like Noreen wrote in our story, there's just not enough renewables out there to offset what's going on right now, and people are going to start feeling the pain.
Well, let's talk about some of those renewables here, because I do like how the two of you wrote about a potential silver lining here. The idea of investment, perhaps, in renewables, barges full of batteries, startups getting investment as a result of this. Help us find the silver lining here, Joe.
Yeah, I mean, the silver lining is that comes online. The bad part of that silver lining is it comes online over a number of years. And it's not something that can just happen now. And I know we've all been having this conversation this year, especially in Europe, right, which is the short-term pain. Suddenly, everybody's looking back. At fossil fuels, right? We need power now. And that's the struggle. So eventually we are going to get important solar coming online, and we're going to have important wind coming online. And these things, included with the ability to store all of that power, are really going to change the dynamics of the grid. But at this moment, it's just not there, and that's why you're feeling this squeeze.
That's right, and we're like far from that. So, look, if this is going to hit industry, Joe, like, what do we expect? Is this something that consumers are going to feel, the energy prices, or are they going to have the knock-on effects of suddenly like this becoming yet another thing that plays into inflation and inflationary concerns?
Yeah, I mean, I'll put it this way: they could feel it. You could see a pass-through of costs, but that won't happen if demand suddenly dissipates even before then, right? If you have real concerns of an already problematic issue of inflation, you have the already problematic slowdown in the economy. Suddenly, if that demand disappears, then passing through those costs maybe isn't entirely possible, and maybe suddenly you're looking at cutting back on a lot of manufacturing capacity. I mean, listen, this is pure speculation, but I am kind of playing out the potential possibilities.
Fitting in with some of the other economic data points that we're starting to get about the global economy, certainly in the U.S. economy. Joe Doe, thank you so much. Metals and Agriculture America's deputy team leader at Bloomberg News, along with Joel Weber, the editor of Bloomberg Business Week. This story you can find on the Bloomberg and at Bloomberg.com/businessweek. We do want to mention some breaking news. Just crossing the Bloomberg terminal, Ramesh Sunny Balwani, the former president of Theranos and ex-boyfriend of its founder, Elizabeth Holmes, found guilty of fraud for his role in the collapse of the $9 billion blood testing startup. And this, Tim, coming 6 months after Holmes was convicted of defrauding investors in that company.
Let's get right now to June Grasso. She's the host of Bloomberg Law weeknights at 10 p.m. Eastern Time here on Bloomberg Radio. June, what does this guilty verdict for Sunny Balani mean?
Well, it seems that he has been found guilty of the same charges. He was charged the same way that Elizabeth Holmes was charged. There was just the question of whether or not on the charges of patient fraud, which she was acquitted of, whether he would be found guilty of those. So in a trial like this, it's basically like a retrial for the prosecutors. So they had a chance to really see what had gone wrong perhaps in the first trial and to tighten everything up. Basically the same witnesses. It was just a question of how they were presented, how the patient testimony in effect was presented. So he was convicted of conspiracy to commit fraud against investors, and I assume conspiracy to commit fraud against patients as well, but I don't see, yes, and patients. So he was convicted of more than Elizabeth Holmes was convicted of. Remember, she took the stand in her own defense, and apparently from the people who were in the courtroom, she was very effective. She's very dynamic. He did not take the stand in his own defense. So here you see what the effects of a prosecution the second time around, being able to tighten up those witness patient fraud charges, and they had a lot of the patients testify. So they did a better job the second time around. But that's the chance that the prosecution, that the defense took when they tried to split when they insisted on splitting the trials.
June, we've got about 45 seconds left here. What's interesting, too, and I'm looking at some of our own Bloomberg reporting, they talk about Elizabeth Holmes, very much the public face of the company. We all know that. Numerous stories. She was out there front and center. But prosecutors said that Balwani played an integral role. I mean, does it speak to him a little bit more in terms of the charges, him being maybe a bit more the mastermind here?
Well, not so much the mastermind, but he was in the lab. He had control of the lab. So a lot of the employees who complained, they were whistleblowers, went to him first. So that he had a more intimate connection with that part of the business. She was still the mastermind, in my estimation, of this whole scheme, but he was there on the ground, so to speak. So that was where the prosecutors got to tie him. Elizabeth Holmes got to say, well, I didn't know it was happening. No one told me that, and I didn't have any connection with the patients, and he doesn't get to say that.
Sorry.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa and Tim Stanovic. My goodness, we are all back together again at once. It has been a while, folks, across TV, radio, and YouTube. It's been a while since we've seen this longer days of gains as well on the S&P.
Gotta say, it feels good to be back with all of you and back together again as our group. It's interesting, though. We are seeing, you're right, Caroline, some outperformance here, but, there are some groups even doing better than what we're seeing in the S&P 500. I've been looking at the semiconductor index, the SOX. It's up about 4.6% as we speak. Samsung Electronics coming out overnight reported a better than anticipated jump in revenue, and that has given a lift certainly to these names here in the U.S. trade. Stocks, keep in mind, still down more than 30% so far this year, guys.
Yeah, and energy stocks, too, also having a really good day. Their best day since June 21st. This is large cap energy stocks. You're looking at the XLE right here, up 4.2%. Oil rising as tight supply outweighing concerns over a global slowdown. We've got some supply stories with a Bloomberg story that Russia ordered a halt to a key Kazakh export terminal. And then also on the demand side, perhaps some more demand coming from China, with they're considering a $220 billion stimulus, and that could cause more people to buy more oil.
And those jobless claims numbers also perhaps alleviating some fears about deep recessions, at least for the time, and therefore the S&P goes up almost 1.5%. But look, volumes are thin, well, it's got to be noted, but we're currently sustaining a 56-point rally on the S&P, the Dow up more than a percentage point, the NASDAQ up 2.25%, the Russell 2000 up 42 points, that's 2.5% higher too, Taylor.
You really see sort of a broad-based rally, if you will, underway on some of the individual sectors as well. Further green on the screen when you think about energy, discretionary, which is actually a huge underperformer for the year, off about 28% or so, trying to claw its way back up about 2.5% or so on the day. At the bottom, Romain, it gets interesting, maybe a little bit of an unwind of the defensiveness. Staples and real estate are the big underperformers, as of course we continue to see yields climb.
Yeah, when you look at the biggest laggards out there, it's pretty much some of those defensive names. Meanwhile, a lot of people piling
dialing back into some of those material names and cyclical names. Freeport, McMoran, up about 7% right now on the back of that news report out of China here of additional potential stimulus that most people are speculating would go almost directly into infrastructure type of projects here. You're also seeing some of those Chinese tech stocks get a bid. Alibaba's ADR is not only up almost 4% on the day, but at 123.51 is now actually back above its 200-day moving average for the first time in almost a year and a half. So a big rebound rally going on with a lot of those Chinese tech stocks. And you're still seeing a little bit of a bid come into some of the healthcare space. We should point out Cigna shares, which are up 1.8% on the day at 276.07. That is actually a record high for Cigna.
Meanwhile, let's talk a little bit about those recession fears, those worries, because, well, if you're going to say that the inverted yield curve is still a signal of such, well, we are still inverted. But it is notable we are back above 3% across your 2s, your 5s, your 10s. No matter where you are on this yield curve at the moment, there has again been a sell-off in the bond market, Carol.
Yeah, absolutely, right? So it makes you wonder, okay, how much, you try to think, how do we get to a recession when we continue to have such a strong job market? We got those weekly jobless claims today, and we did see the highest monthly read that we've seen, I think, since January, or last week, I should say. Tomorrow we get the monthly jobs report. That's going to be very key. It always is. Heather Boucher, who's White House economic advisor, she weighed in on this and how the administration is watching very closely, the labor market.
I think what we are looking at, and certainly what the Council of Economic Advisors is looking at more generally, is how many people have jobs? Where are those jobs? What does that look like for people? What is family economic security? Because that's the foundation of spending across our economy. Consumer spending is 70% of GDP. So making sure that we are attending to that basic fundamental fact. The president has said it so many times now that his goal is to build an economy from the bottom up and middle out. And that's a promise that he has made to the American people and one that he is working each and every day to keep.
All right, that's Heather Boucher, White House economic advisor, speaking with our Bloomberg surveillance team. Right, guys, so the monthly jobs report going to be really important, what we get tomorrow. It looks like we could see a slower number than what we've seen in the past, but it's going to take some time to bring down this labor market. And I really do wonder, Tim, right, how do we get a recession when we continue to have jobs?
Yeah, it's a really good question. And look, you listen to what Fed Governor Chris Waller said a little bit earlier today. He said that he's still confident that the U.S. can achieve a soft landing here and that concerns of a recession, well, he's not as concerned as a lot of other people are.
I think it's interesting, Tim, that you bring that up. We heard similar from Jim Bullard, of course, president over at the St. Louis Fed, saying, well, some of these traditional recession indicators are perhaps maybe a little bit more unreliable than they have been in the past as well. And so maybe looking at not only just the 2s, 10s, but the duration, the magnitude of that inversion, certainly something that we've been talking about.
Where is the disinflation coming from?
What do you mean?
I got
cheddar was the only cheaper thing.
Shipping rates have come down. There's a lot of things. We've had a lot of indicators that things have come down, no?
And Kathy Wood would argue technology is the great long-term disinflationary trend.
I got 3 8-packs of Spindrift for $10 at the supermarket.
In the
UK. And usually they're $7 for an 8-pack.
In the UK, they are currently putting sort of security tags on butter.
What is he
there's £9 on like a Lurpak pack at the moment because people are, I don't see much disinflationary pressures at the moment, apart from perhaps the fact that oil, copper, commodities have rolled over to a certain extent. They're up again today, though.
We talked with Stephanie Flanders, right, who oversees global economy for us out of London for Bloomberg News. And she said, they are seeing signs of economic data points of a global slowdown in the second half. So we're starting to see, like Caroline, you pointed out, those numbers roll over.
I'm wondering what you guys think of the decline in oil prices, notwithstanding today, but what we've seen over the last few days and the way that they have started to seep into gas prices coming down. They have been coming down over the last 3 weeks, but ever so slightly here. I mean, we're still at $4.75 a gallon. Some places in Texas, $3.99 a gallon, but on average, still $4.75.
I don't know. I mean, I think the damage is done there, Tim, and even at $100 a barrel or whatever we were at yesterday at 98, that's still well above some of the longer-term averages that folks are used to. And I thought it was interesting, Joe Doe, a Bloomberg News reporter here, had a great story about a lot of manufacturing plants, including aluminum plants and steel plants, that have basically shut down or curtailed their operations because of the high price of power. Right. So this all sort of has ripple effects that even if we do see sort of that moderation that I think Waller seems to be looking at, it's going to take a long time for us to get back to something resembling normal.
And we just heard from Brian Belsky, of course, strategist over at BMOS. And if you get a little bit of a lower print on that CPI, maybe huge rally here within the equity markets, as maybe we're sort of convinced that maybe the worst is behind us.
And so I wonder what a good jobs number is tomorrow? I mean, today, bad news was good news on a certain extent. What are we looking for in terms of participation rates? What are we looking in terms of wage prices as well? Has there been any uptick in those sorts of numbers? Because we're certainly expecting some sort of slowdown to growth.
Like Goldilocks, right? Do you need wages? You don't want to see maybe wage growth, right? Because that feeds into the inflation numbers. Do you want to see maybe a little bit of a softening numbers? Because if it's too soft, as our Mike McKee said, then those recession fears start to freak out investors. All right, we got lots more to come. That does it for now. We're going to be back in less than an hour's time, live on TV, radio, and YouTube at 4 p.m. for our Beyond the Bell coverage. We'll take you through today's market close on this Friday's Eve, Jobs Eve.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Tim, we were just talking about with our TV colleagues about some of what we're paying for things. The thing is, I think it's going to take a while for prices to come down. And I notice when I go into a store, there's a lot of shelves that are empty. I tried to buy Mucinex. It was like $40. I was like, what?
Yeah.
But I know medicine can be expensive. But I think what's interesting is we have to watch the trend lines and whether it's jobless claims, whether it's monthly job numbers. If we are starting to see a rollover of some of these heated, hot numbers, that's significant. That's important. It's not those one-time blips or even small moves, but it's a trend line that starts to develop.
Cheryl, given how many months we've been talking about these, this red-hot inflation, we are going to start seeing base effects come into this as well soon, too.
That's a good point.
If we don't start to see that, then that's a real concern because that means 2 years in a row of accelerating prices.
I mean, realistically, I was just talking to somebody about, paying higher taxes in a certain area because school budgets or what have you. I mean, you have every individual, right? Family, businesses, you have a fixed pool that you get to play with, and you're going to have to start to make some choices. And I feel like our chip story that we did with Ryan plays into it. You're not going to necessarily see Amazon maybe cut back on their chips for the cloud and so on and so forth, but there are going to be some areas maybe they don't hire as much, and we know they've already been letting go workers. Right?
Will be really interesting for us to see, Carol, in the coming weeks when we start to hear from more and more companies. Banks report earnings next week, so that's a good good place to start.
Right, we'll be thrown into that earnings season and get an idea of what kind of visibility they have or what they're willing to talk about. All right, right now, back to World and National News and Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. A confession today in a Russian courtroom from WNBA star Brittany Griner. She pleaded guilty to carrying vaping cartridges with cannabis oil through a Russian airport. Her attorney, Alexandra Boykov, says Griner admitted she never intended to break the law.
She was in a hurry as she was packing, and it was just by accident it ended up in her luggage.
Boykov says they're hoping for a lenient sentence in the case. She could receive up to 10 years. Another hearing is set for next Thursday. Actor Denzel Washington and Olympic gymnast Simone Biles topped the list of notables at a Medal of Freedom ceremony now underway at the White House. President Biden is awarding medals to 17 distinguished Americans.
An extraordinary group of Americans up here on this stage that I have the honor to recognize today with the Presidential Medal of Freedom, our nation's highest civilian award.
Other recipients include U.S. women's soccer star Megan Rapinoe and former Arizona Congresswoman Gabby Giffords. Actor James Caan has died. He died yesterday, according to his family that posted the news on Twitter. Caan often played mobsters, including Sonny Corleone in The Godfather, and he told reporters back in 1999 that made people jump to conclusions about his heritage.
I'm not Italian, although I've won the Italian of the Year twice over here in New York. I keep saying, you don't get it. I can't accept this award. You just don't understand.
Again, actor James Caan dead at the age of 82. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. How shall we begin here, Tim?
Okay, well, last night Business Insider published a story about Elon Musk having two kids, twins, who were born in December of 2021. These are in addition to the two kids that he's had in recent years with Grimes. And Elon Musk essentially acknowledging that on Twitter earlier, saying that he was doing what he could to help with the population crisis. It's actually something that he's tweeted about and talked about for years, saying that the world is suffering from a population crisis. But because we live in 2022 and Twitter's the medium of choice for many, we're seeing lots of reaction from people of all stripes.
And we've seen him actually respond to this, right?
Yeah. He's saying you can he says, quote, "Doing my best to help the underpopulation crisis. A collapsing birth rate is the biggest danger civilization faces by far."
Yeah, there's been some real interesting responses in social media about this, including Michael Burry, whose cryptic tweets about market risks have been striking a chord of late, shifted topics to the U.S. birth rate today, taking what appeared to be a swipe at Elon Musk after reports that the Tesla co-founder fathered twins with an employee. Of course, as you said, Elon Musk addressing that. So here's what Burry, you know him well, founder of Scion Asset Management, known for betting against the housing market before the 2008 crisis, a bet that he got right on the money. He acknowledged lower birth rates, but said, quote, "That doesn't mean that bosses should sleep with subordinates to try to remedy the situation." This is, God, it just crisscrosses with so many things that are going on in our world.
You know, I have a lot of thoughts about this because, you know, we can talk about we don't have much time, but we can talk about the lower birth rate in the United States, but I wonder to what extent that has to do with policies here in the U.S. that don't make it very easy for people to have babies. No guaranteed paid family leave. Many Americans not even having the opportunity to take time off after they have a baby.
Yeah.
Head Start, issues like that. Expensive education.
Yeah, there's so many different issues and so many different places we can go. And then, you know, just the whole Elon angle and how he's weighing in on this.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ at or near session highs. Let's head right over to the first word breaking news desk for today's afternoon call. And here is Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks firmly in the green right now. The Dow currently up 369 points. S&P's rise 633, while NASDAQ is up by 276. The U.S. 10-year yield at 3%. Gold is a little changed. Oil is climbing. And Bitcoin is higher by 4.9%. Among the main 11 S&P sectors, all are trading in the green. And leaders to the upside in the Dow, Caterpillar, Nike, and Intel, while Coca-Cola fell 1% and led to the downside. In deal news, Meridian Bio to be acquired for $34 a share in cash. And in other news, mortgage rates posted their biggest one-week decline since 2008. Wrapping things up, Levi Strauss and WD-40 report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com.
All right, full disclosure, I didn't do a lot of reading while I was sick out with COVID, to be quite honest. I did periodically say, hey, Google, give me a news update. And when I did yesterday, that's when I heard about Amazon and Grubhub teaming up. I got to say, though, Tim, we're still trying to figure out, what this relationship does and means.
And can New Yorkers actually get it? Grubhub and Seamless are the same company, but it can't get it on Seamless. We're trying to figure out what's going on. Fortunately, we've got a great person to help us do that. Jackie Davalos is technology reporter for Bloomberg News. She's with us right now in the Bloomberg Interactive Brokers studio. So this is a great day two story, Jackie, because I think a lot of people who were paying attention yesterday understand the news that Grubhub and Amazon have teamed up for Amazon Prime customers to get, free Grubhub delivery.
Absolutely. At the end of the day, for customers, this is a much better deal. Prime has a really impressive, very loyal membership base of Prime subscribers. I mean, you can get your shampoo, toilet paper, and now you can get your dinner delivered. So at a time where people are really pinching pennies, you don't want to have to be paying, fee after fee, tips. And so this is just a good way to clean it up and provide a deal to their customers.
Okay, so what's in it for Grubhub and for Amazon?
Well, this is an especially good deal for Grubhub. They have been needing a lifeline of sorts. If you remember at the beginning of the pandemic, they lost a ton of market share to DoorDash and Uber Eats, and especially in their top markets like New York and Chicago. So they've really been looking for ways to kind of get some of those customers back and keep them on. And they've still been struggling. Their parent company has been looking to sell them, and no one's really up for the buy right now. And so this is not only a good way to kind of really boost that user base again, but also make them a more attractive acquisition target for other companies.
Grubhub is like, I finally got a date. Thank God for the big dance. So there's a little bit of that going on. But I also feel like for Amazon, man, they are thinking so much about how to hold on to all of us who are part of the Amazon Prime deal.
Absolutely. And, a lot of us forget that they actually did wade into the food delivery industry a while ago. It didn't work. It didn't, unfortunately. It was back in 2015, and it was called Amazon Restaurants. And Jeff Bezos himself was really reticent to get into this space because if you think about it, the moment a hot meal gets to your door, it's a toss-up. It could be perfect, or if you order sushi on the wrong day, it could really just ruin that Prime experience for Prime subscribers. And so he didn't invest a lot into it, and it kind of folded. And so this is kind of a way of inching back into the space for sure.
So for Amazon, it's kind of like, yeah, I'm going to date you a little bit, but I've got to back up.
Absolutely.
Or I can back out at any moment. I mean, it just feels like, because having been homesick, I did a lot of ordering of food, and man, so many times things are messed up.
Oh yeah, and it's pretty interesting how they structured this partnership. They didn't exactly take a stake outright. It's an initial option to do so through warrants, and then they can increase that up to 15% if things go well. So it's, a lot of protection, and it's a cautious move in, but absolutely for us that, are so used to going on DoorDash or Uber Eats and rapid delivery now, it's just going to bring that, fee notch down a notch a bit.
Okay, so what does this mean for Amazon Prime customers who are getting that price hike up to $139 a year at a time? When, in your own words, Jackie, customers are pinching pennies because everything is more expensive right now. Does this make that Amazon Prime subscription that much more valuable and somebody less likely to cut their Prime sub?
I think overwhelmingly yes, because when you think about how much that Grubhub Plus membership is worth, you don't just get free delivery. You get a slew of other perks and deals, and that's worth $9.99 a month. And that pays for itself if you order, at least 3 to 4 times a week, which many people do. And so for Prime subscribers that have already dealt with this Prime increase, this is just an added bonus and, just a free perk for a service that many of us use.
So what does it mean for the other food services? Have you been thinking about, what does this mean for other players, either in big tech or other world, I don't know, that Amazon competes with, or just the other food delivery services? Are they kind of need to be thinking about maybe hooking up with someone? Do they have to?
It ups the ante a bit, because I think many had thought that Grubhub was just kind of a dead asset at this point. And given they've lost so much market share, this kind of puts them back in the game in a way. And, you saw it in DoorDash and Uber's stock price yesterday. They were under pressure a bit because, if you're going to have a partner, you want it to be a logistics giant like Amazon.
Interesting, and I wonder about the logistics part of this, because Amazon does have that part figured out, but delivering food is tough. Margins are really tight, and there is a lot of competition, Jackie. Just in the last 30 seconds, does this tell us anything about what Amazon's ambitions are, not for food delivery, but for last mile, an area that it really has covered?
I think it means that they're looking to get into a space that has had a tough time figuring out how to make the economics work, and they already have a really big network of drivers, and so expanding into something like this can only help, especially as they're looking to tap other areas of growth.
So I'm going to order my paper towels, and I'm going to get a salad along with it.
Maybe some sushi too, Carol.
Some sushi. Oh my God. It's just Amazon taking over the world. Anyway, it's really kind of cool to see how this is all evolving. Jackie DeVolas, technology reporter at Bloomberg News, back in our Interactive Brokers studio. I don't know, Tim, what do you think?
Look, it makes sense. A question that I have just over and over again is what this means for Seamless, which is a Grubhub company.
Yeah.
And because that's what we use here in New York. So is it going to work here?
I don't know.
I'll have to try it out because I'm a Prime subscriber.
Exactly. All right, you're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, you are listening to Bloomberg Business Week on Bloomberg Radio, watching us on YouTube. Carol Massar, Tim Stenovic. Hey, coming up, Sun Valley, Idaho.
Looks pretty nice there right now.
I know.
The mountains.
Yeah, the media folks.
The media folks, the billionaires, the private jets. Elon Musk apparently flying in today.
Yeah, I can't wait to hear what he has to say on Saturday. All right, we're going to get a preview in just a moment with our own Ed Ludlow. Right now, though, back to the markets and your top business stories with Charlie Pellet.
I thank you very much. We've got 28 minutes to go ahead of the closing bell. Do you want to begin with a developing story? Headline from the Bloomberg Professional Service. Luxury brand Tom Ford said to be exploring a potential sale. Again, developing story, one we're watching for you here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing today, holding at or near session highs as we head toward the close. S&P up 61, a gain of 1.6%. The Dow up 355, up 1.1%. NASDAQ up 267. That is a gain right now of 2.4%. The 10-year down 20, 30 seconds. 10-year yield 3.00%. The 2-year 3.03%. Spot gold up 0.1%, up $1.88 the ounce to $17.40. West Texas Intermediate crude up 4.2%, 102.63. But also catching our eye, natural gas surging 13.8% right now. Nat gas 627 per million BTUs. The Nasdaq 100 index up 2.3%. Broad-based rally right now with the Russell 2000 up by 2.5%. Wall Street is counting down to the government's monthly employment report set for release tomorrow. And with a preview, here's Bloomberg's Vinny Del Giudice.
Weekly jobless claims rose to 235,000, the highest since January after setting historic lows. Rising interest rates aimed at curbing inflation are weighing on growth, and the Federal Reserve plans more rate hikes. Friday, the government issues June payroll data. Wall Street anticipates moderation. Vinny Del Giudice, Bloomberg Radio.
Bed Bath & Beyond shares rallying after filings showed interim CEO Sue Gove and a pair of directors snapped up shares in the beaten-down company. Bed Bath & Beyond up now by 22.5%. GameStop, after announcing that 4-for-1 stock split, up by 14.3%. Recapping, S&P up 61, a gain of 1.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Let's get back to some of the day's events. And you guys know that the big media event known as Sun Valley, it is continuing in Sun Valley, Idaho. Coming up this weekend, Tim, we're going to hear from none other than Elon Musk. And I feel like there's so many things that might come out of his mouth, and there are so many questions that we'd like to ask him.
Well, fortunately, we got Ed Ludlow on the ground in Sun Valley, Idaho. He's got the really tough assignment this week, Carol. He's with the billionaires. He's in the mountains. Ed, did you bring your cowboy hat?
I did.
Good.
I did.
Okay, just making sure you brought your cowboy hat. Ed Ludlow is West Coast correspondent for Bloomberg News, joining us on the phone this afternoon from Sun Valley, Idaho. Ed, I'm looking at Elon Jet, one of my favorite Twitter accounts right now, and it does not show that Elon Musk has taken off yet from Austin, Texas. Give us the latest.
So here's what I know. According to sources at the Allen & Co conference here in Sun Valley, Elon Musk is due to speak, give a presentation of some kind on Saturday. And that's interesting because Saturday is usually reserved for Warren Buffett. That's when Warren Buffett usually does his kind of big picture look at the world. Elon Musk, sources tell me, has changed his arrival plans many times. I think there's a lot of stressed out people here. I'm also hearing that there's a lot of excitement. There was a panel earlier today, I'm told, where there were all kinds of topics. One of them was biology. The conversation pivoted to Mars. And then, the presenter of the panel said, nope, that's Saturday with Elon Musk. So, I think people are bracing for it. And in the background, of course, there's the question about Musk's deals by Twitter.
Oh, I'm sorry. I thought you were going to say, and also in the background is Musk, hey, can you tell us about those other kids you've got?
Well, this is what is so astonishing, that Elon Musk generates such a regular news flow. The cadence of news is so dominated by him. And for the audience out there that don't know this one, Business Insider reported that Elon Musk had twins with an employee at Neuralink, one of his startups, last year. The twins are now 8 months old, and through court filings, they applied to have the names of these twins changed to reflect the Musk name. And the context here is that Musk is very worried about population growth globally, and he says, I'm paraphrasing, he's just doing his part.
I'm speechless, Ed. I'm speechless. Carol, please.
Oh my God. All right. So what's interesting is, so first of all, like this is, okay, we're going to try and beat Bloomberg.
Get back on track.
Yeah, exactly. Okay, so Saturday isn't typically Warren Buffett.
Oh, back to Warren Buffett.
So
Back to Warren Buffett. We're going to go back to Warren Buffett.
Right, to our roots. So Warren Buffett, is he not going to be there? And if Elon is taking that spot, like what does it say about the importance of Elon Musk?
I wouldn't go as far as that. Warren Buffett is here. He's been wearing a selection of colorful print shirts, which are very nice, and he obviously gets a lot of attention. It's just interesting that Musk is speaking on Saturday in a slot that we assume would have been Warren Buffett. You know, Saturday is the end of the conference. Frankly, a lot of people leave Friday, usually. Sources tell us that actually Saturday outside of Buffett is typically where the startups and founders make pitches, right, to the investors in the room. That's part of the point of Allen and Co hosting this, to bring investors together with companies. But it is kind of being put to us here that this is like a passing of the generational baton. And look, everyone wants to speak to Elon Musk all the time. Absolutely everyone I've spoken to in the corridors, in the woods and the trees and the mountain bike trails here wants to hear from Elon Musk. The timing's just interesting.
Okay. Well, okay, so Ed, we're going to stay on Elon Musk here and what his plans are. Twitter, okay?
Yes.
What is the latest here? Because we still see shares trading significantly below 54.20.
Yeah, and forgive me, I don't have my Bloomberg in front of me, but we're higher, right? Up a few percentage points today.
Yes.
But the news, the latest is that Twitter executives earlier explained that Twitter bots are less than 5% of all users on the platform. They basically reiterated a previous line, and the shares moved. And that is Musk's concern. Both Parag Agrawal, the Twitter CEO, and Ned Siegel, the CFO, are here. And Ned Siegel walked past me, and as I do, I said, hello, Ned, are you going to meet with Elon Musk? And he gave me a pretty astonishingly wide smile. And for reasons I don't quite understand, he stuck his index finger in the air and as if to say one, the digit one. And I don't know what he meant by that, but he didn't answer the question either way. So that's what we want to know. Are they going to meet?
So did he lick his finger like testing the winds, like which way the winds, maybe the Elon winds were blowing? Oh my God, cannot wait to see what happens and the reporting. If you could sit down with Elon Musk, what would you ask him, Ed? We got 20 seconds.
Yeah, I would ask him, when is Starship going to launch for real, this big rocket SpaceX is working on? Because I'm not getting on it, but I think that's a huge milestone for mankind in space and something he's working on right now.
Carol, this thing is big.
Okay. I thought he might ask, any other kids we need to know about? Like, while we're...
Oh, goodness.
We love you, Ed Ludlow, West Coast correspondent at Bloomberg News.
Let's go from Sun Valley, Idaho to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. After months of scandal, British Prime Minister Boris Johnson today announced his intention to resign.
I want you to know how sad I am to be giving up the best job in the world. But them's the breaks.
Johnson wants to stay on as a caretaker until a new Tory leader is elected. Conservative MP Tobias Ellwood tells Bloomberg that will be a two-step process.
First phase is the MPs, ourselves, select two candidates. Those two candidates are then put to the party base, who then make that selection. I think we can get through that first phase in a matter of days, in a week and a half, 2 weeks or so. And then you've got about a month or so where you've got to go to the country, allow the party membership to then make a judgment on it, comparing those two, having a vote towards the end of that. And that'll probably be concluded, I suggest, by first week in September.
Ellwood says there are suggestions an interim prime minister be installed to prevent Johnson from implementing policy before his departure. Well, President Biden this afternoon has been honoring 17 people with the nation's highest civilian honor, the Medal of Freedom. He joked with gymnast Simone Biles, who was one of the recipients.
Today, she adds to her medal count of 32. I know you're going to find room. 32
Olympic and World Championship medals.
Other recipients included posthumous medals for Labor leader Richard Trumka, Senator John McCain, and Apple founder Steve Jobs. Rafael Nadal has withdrawn from Wimbledon today because of a torn abdominal muscle. The news comes a day before he was supposed to play in the semifinals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons there in our 99.1 newsroom in Washington, D.C. This story just getting a read spike and is now our second most read story on the Bloomberg terminal in the past 60 minutes. Has to do with John Paulson. You know him well, the 66-year-old head of Paulson & Company. And he was accused by his wife, Jenica, of secretly creating a series of trusts to hide billions of dollars in assets from her in their divorce. I feel like we're watching an episode of Billions.
Yeah, she's 50 years old. She sued her husband Thursday in state court here in Manhattan, Carol, claiming that he and, quote, a cadre of handpicked agents and advisors worked to establish 3 irrevocable trusts to make sure she didn't get her, quote, fair and equitable share of assets. She's asking for at least $1 billion in damages from her, quote, astronomically wealthy husband.
Yeah, he is very, very wealthy. John Paulson, he filed for divorce in state court in Long Island. That was back in September. He and his wife, whom he initially met when she delivered lunch to him and his staff from the Bear Stearns cafeteria, have been married for more than 20 years. They've got 2 teenage daughters. She said in her suit that she learned of his divorce filing from the New York Post. This is why you have to read the New York Post on page 6, I'm just going to say. And the business section. I know people are critical.
Can I say sometimes, Carol, we're in our studio together and it's like a long break and I hear this gasp come from Carol's computer and I think to myself, and I say, Carol, what happened? And she says some page 6 headline. So,
It's so true.
she's not just talking the talk, she's walking the walk too.
It's pretty remarkable.
The reporting has been pretty good.
Right, in terms of the people within the world of finance and just business in general. Paulson, by the way, if you want to know the numbers, he's got a net worth of $4.6 billion. This is according to the Bloomberg Billionaires Index, mostly due to his winning bet against the U.S. housing market ahead of the 2008 financial crisis. He is known for that legendary bet.
He turned his hedge fund firm into a family office back in 2020 after assets dropped to about $9 billion in 2019 from a peak of $38 billion, Carol, back in 2011.
This is when, at some point, because too many details are coming out from the filings, that they're going to be like, okay, time for a settlement. So we'll wait to see what happens.
Good point.
You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all rallying. We're off session highs, but still holding on to substantial gains today. S&P up for a fourth straight day. The tech-heavy NASDAQ 100 up by more than 2%. The 2- and 10-year Treasury yield curve remains inverted for a third day. Let's begin with the 10-year. The yield now 3.00%. The 2-year 3.02%. Cannot ignore energy today. West Texas Intermediate crude rallying 4.2%, 102.68 a barrel. Natural gas surging 13.2%, 623 per million BTUs. Spot gold is up 0.1%, 17.40 the ounce, and the equity markets are higher across the board. The S&P right now up 57 to 3902, up 1.5%. Dow Industrials up 341, up 1.1%. The NASDAQ Composite Index up 255, up 2.2%. NASDAQ 100 Index also up 2.2%. Broad-based rally with the Russell 2000 up now by 2.3%. Again, recapping, the S&P up now by 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
With each passing day, the brave new world of cryptocurrencies is looking more like the perilous old world of Wall Street circa 1929. Supposedly stable investments are proving to be anything but. Trillions of dollars in virtual wealth have vanished. The right response is relief. Relief that things didn't get even worse. Rarely has a crisis been so well timed. Crypto managed to boom and crash before it became too connected to the broader financial system. The damage has been limited, mostly to those who, despite ample warning, chose to get involved. There's no need for emergency intervention. On the contrary, the bubble's deflation affords regulators and investors a unique opportunity to reflect on lessons learned. Perhaps the speculative frenzy surrounding crypto will give way to the development of truly valuable applications. For the time being, though, it's better to keep a safe distance. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we've got just about 10.5 minutes left in the Thursday trade. Carol Massar along with Tim Stenovic right here on Bloomberg Business Week. And Tim, we've got stocks up, bonds down, yields moving up. I'm trying to figure out which trade do I trust. I mean, that sounds about right? If stocks go up, bonds typically go down. But I'm trying to figure out which one really has it right.
Maybe Brad McMillan has the answer for you. He's joining us now. He's Chief Investment Officer at Commonwealth Financial Network. Brad joining us on the phone from Waltham, Massachusetts. Commonwealth has got approximately $232.5 billion in assets under management. Brad, how are you?
I'm doing great. I hope you guys are having a good summer, too.
We are.
Well, we're not. Look, no, we're not, because we both are dealing with COVID issues.
But we are healthy. Our families are healthy, and that's certainly what's important here, Brad. But you ask and you get the answer you might not want with us. Okay, that's the thing here.
Pretty honest.
Let's talk markets. Help bring us up to speed about what you're seeing, not just in the trade today, but the recent trend that we're seeing. And I'll ask you the question that I ask everyone: is the worst behind us?
I think the worst is behind us for a couple of reasons. First of all, when you look at everything that's been driving this, it's really been about interest rates so far. And, inflation is starting to top out. We're seeing commodities start to pull back. We're seeing supply chains normalize. The Fed has pretty much been as hawkish as they can be. So fears are going to go down. And when interest rates start to stabilize, that gives us the ability to start moving ahead. And I think that's where we are now. Most of the damage has been done.
Okay, but the the impact of that damage can stick around for a while, and that has certainly been the case of higher inflation. So even if we come down a bit, we're still at pretty high levels. Maybe not historically, but certainly high compared to recent history. So that damage on the economy as well as on the markets can stick around for a while. Fair?
I think that's fair, and I think you're absolutely right, Carol. That was what drove the market last month. It's more about, are we going to get a recession and what's that going to do to earnings than what are interest rates doing and what does that mean for valuations? That damage is done. But I would argue the economy still has a ton of momentum, and a lot of that fear is overdone.
Where are you seeing that momentum right now? Because, we just had this great story from our own Joe Doe in Bloomberg Business Week talking about higher energy prices are actually leading to the closure of some industrial firms because those prices have tripled that they're paying. We see food costs going up. Tell me where you're seeing the bright spots right now. And look, we know that consumers did a good job saving during the pandemic, but they can only pay for $5 a gallon gas for so long.
Absolutely true. But the one bright spot that we're looking at here is employment. And yes, I know the jobs report is coming up. I get that. But if you look at where we've been, we've continued to add jobs at about 400,000 a month. That's about twice the pace of what we were doing before the pandemic. And we still have millions of jobs available. So, we don't typically get a recession as long as people are working and can work. And I think until we see the employment market turn around, I'm betting against a recession.
So what does that mean in terms of betting your financial bets? What does that mean you're advising clients to do, or how are you putting, their money to work? Excuse me.
Well, when you look at the markets, there's been a lot of fear about what bonds have done. Okay, fair enough. We've seen an unprecedented trade down in bonds, but why was that? That was because interest rates moved up, and now it seems to be that interest rates are normalizing. So bonds, all of a sudden, you're getting paid more than you've been paid in a while. I don't mind bonds at this point. When you look at stocks, okay, stocks are now cheaper than they've been in the past couple of years, and all of a sudden, the earning yields, the free cash flow yields, are competitive with what we're seeing in bonds. In other words, I look at a market and I see a normal market with some potential moving ahead. I don't see a ticking time bomb, which is what a lot of the coverage is suggesting.
Okay, so let's talk about what you're going to start to see here. Carol had the great question about where to put money right now. I want to go back to your macro outlook because you have it sounds like you're really optimistic. You're much more optimistic than a lot of the people that we've spoken to. But you're also speaking in a way that a lot of our people who cover the Fed and cover economics think, which is with 500,000 people added to the payrolls every month so far this year, it's hard to look like the U.S. is in a recession right now. When do you start to worry? Is it if we get a softer than expected jobs report tomorrow, or do those numbers have to start going negative each month?
I think I'm going to continue to be reasonably cheerful as long as job growth stays above 200,000 a month.
Okay.
Okay. As long as the number of jobs out there available stay in the millions. That says to me businesses are hiring and people are working. So if we go below 200, that means we're going below pre-pandemic levels, and that's when I start to pay attention.
Okay. So, I do feel like we don't have the playbook on all of this, right? Pandemic, coming out of a pandemic, taking away unprecedented amounts of stimulus. That was different stimulus from the financial crisis. Is it fair to say, though, some of what we're doing right now, we're really making some big guesses?
Oh, absolutely. But the thing is, Carol, that is always the case.
Yeah.
So for all the sense that, we know what's going to happen, we can make some educated guesses, and overall we do pretty well. But when we get into situations right now, I think you have to go back to the fundamentals, and that's why I am where I am. I can tell you a lot of scary stories, but businesses are still hiring. People are still working. People are getting raises. Things are getting better, not worse. And I think that's ultimately where I've got to stand.
I like the optimism here. Okay, apart from job declines or 200K a month, where else should we be keeping an eye on just in the last 30 seconds that we have with you, Brad?
I think oil prices are the big one.
Okay.
The question really is Russia going to change the oil market structurally going forward? And we don't know yet.
That's the big negative wild card in my mind.
Yeah, I think that's a big one. I agree with you. We got to run. Hey, Brad, good to check in with you, get your thoughts and your perspective, and I do like the level-headed feel of it. Brad McMillan, Chief Investment Officer at Commonwealth Financial Network, joining us on the phone from Waltham, Massachusetts, and roughly $232.5 billion in assets under management.
Glass is half full for Brad.
Well, and it is smart to be level-headed. This is, these are markets. They go up, they go down. We need to look at kind of the fundamentals, and we'll get a feel of that, Tim, as we start to get into that earnings season really soon. All right, folks, equities, they are just off their best levels of the session. Right now, it's time to head over to our TV team for Beyond the Bell, live on radio, TV, and YouTube, our cross-platform coverage. We're counting you down to the close.
Right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. Carol, a 4-day rally here on the S&P 500, something we haven't seen since late March.
But something we talked about, right, when we all got together at 3 p.m. Wall Street time, and that is the lack of conviction in terms of volume. So there's not a ton of volume, Tim, when it comes to this push higher.
Yeah, but okay, fair, fine. Volume is.
He's got to live with me, so he's got to agree with me just a little bit.
I got to agree with you, and I know Caroline would have said something about volume too, because whenever I talk about conviction there, that's what she points to, and you guys are absolutely right. We just had a great conversation with Brad McMillan, the Chief Investment Officer over at Commonwealth Financial Network. $230 billion in assets under management. He is optimistic, you guys. He said the worst is behind us. Most of the damage has been done. He said when you look at the jobs report, the number to watch out for is anything below 200,000 added per month. Then he's going to start to get concerned. But when he sees jobs numbers like he's expecting to see tomorrow, like we've seen so far in 2022, he's not concerned about a recession.
Okay.
And jobs openings too.
Interesting, but of course, it's not so much the recession, it's more if the jobs number comes too hot, how hard, how fast the Federal Reserve continues to go, and whether really a soft landing is ever approachable, applicable, or attainable, really.
Yeah, and I mean, look, I think this one data point isn't necessarily going to sway the market as much as it is that trend line here. And I also think, I understand why everyone's focusing on the jobs market, but you can't really take your eye off inflation. Jerome Powell has made it clear that that's basically their goal right now, and price stability along with it. And there's no real sense here that they're going to let up just yet, unless there's just something materially different in that number beyond just 200,000 to 400,000. The closing bells here in New York City with the Dow Jones Industrial Average putting together a nice rally here, up 340 points, 1.1% on the day. The S&P going to finish higher for a fourth straight day, 1.5% on this particular day. The NASDAQ composite up more than 2% at the close, and the Russell 2000, you know what? That's your outperformer of the day, up 42 points or 2.4%.
I got an outperformer for you. Take a look at the Philadelphia Semiconductor Index. It was up more than 4.5% or around 4.5%. And then, as a result, and it's kind of connected, the NASDAQ Golden Dragon China Index up about 4% because of chips. You guys are making... What? Are you making fun because I always talk about it?
Yes, I was actually upset yesterday and in the 3 o'clock hour when I didn't hear the K-Web.
But China's also talking about like another $220 billion in infrastructure stimulus.
We love it,
hey guys, the Chinese economy is pretty important in case you didn't notice.
Love it. We'll bring it back here to the U.S. Carol, I like to tease those who I love. You know that. Take a look at where we are on a sector level, a couple dives deeper underneath the surface to give the audience sort of a real understanding of what's going on in the internals of this market. It is pretty risk on. There's a lot of green, even in the, quote, worst performers, if you will, for our radio audience. You have auto, semiconductors, energy, media and entertainment, technology and hardware. Those are all up at least 2% or so on the day, sometimes as much as about 5.5% on the day. There's about 4 sectors that are in the red. A little bit defensive here, food and beverage, utilities, household products, something I guess that you would typically expect, Carol, when yields just continue to climb. We're still above 3% or so across that yield curve.
I love that you kid. I love that you kid. All right, let's get to some of the gainers in today's session. And among them, I talked about semiconductors, definitely an outperformer as a group overall. And this had to do really with semi-bellwether Samsung Electronics, or Samsung, I should say, coming out and reporting better than expected jump in terms of their revenue numbers. And that lifted the entire chip sector. We saw it in Asia overnight. We saw it into the United States. And I'm just putting up there, KLA 10 Core up about 7% in today's trade. Moderna, this was certainly a standout. It was top among the S&P 500 and the NASDAQ 100. I didn't see any real catalyst, to be quite honest. Stock's still down about 30% so far this year. But nonetheless, we did see it up about 8% in today's session. Based on my own personal experience, COVID is not going away anytime soon, so we're going to need vaccines. And one more I want to mention, Seagen rallying today. Merck in advanced talks to buy Seagen. They're talking about maybe an offer price of around $200 a share, at least that. This is according to those in the know, so that would be about a 14% premium. And we saw Seagen up about 1.6% today's trade, guys.
All right, kind of easy in a day like today, Carol, for you to find gainers. Much more challenging for me on a day like today to find decliners. Let's start, though, with Otis Worldwide. It's the elevator company. Shares falling 1.6%. JP Morgan downgraded it to neutral from overweight. Analysts cutting the price target to $62 from $100. Shares trading at $70 a share right now. This is a really interesting one. Enjoy Technology. It's a SPAC. It was founded by Ron Johnson, former Apple executive. It went bankrupt last week, but it seems like retail investors are trying to play it like other bankruptcies like Hertz. And it fell earlier this week. It fell again today, but it rallied earlier this week as well, down 4.3% today. And here's one that's really interesting. Helen of Troy. This is the parent company of VIX, Osprey, OXO, Braun, and more. It's about 3.5 and change $billion market cap company, finishing down by 9%. The company lowered its adjusted earnings per share, net sales guidance for the year. The company executives and CEO actually saying that the macroeconomic outlook has changed since our April earnings release as consumers shift their buying patterns and adapt to a number of factors, including the impact of inflation and interest rates rising more rapidly than expected.
Interesting that that company's saying that even after we saw the Bank of America survey showing that actually consumers still resilient, still spending on debit and credit cards. I'm looking at what was a risk on tone that perhaps we got from that B of A report, that perhaps we got from the jobless claims, just looking a little bit slower than we worried about previously. So maybe less worry about a real crash landing in this economy. And of course, Chinese stimulus helping push commodities higher. We're talking about WTI crude, oil bouncing back up almost 4%. We're looking at some of the metals get a bid on, zinc up 2%. We saw copper rally as well significantly. And overall, we're seeing natural gas, though, very painful over there. We're seeing up 13%. So look, inflationary pressures still front and center in my perspective. I'm looking over at what, of course, has been an FX market that has been king dollar all the way of late. But today, the dollar for once, calmer. Still near that 20-year high on the dollar index, but we are just 2-year high, I'd say, on the dollar index, but still just containing its enthusiasm a little bit on the day. The Canadian dollar strengthening as oil rises, of course. Aussie dollar strengthening up 0.9% as commodities do well. And the British pound strengthening 0.8%. That's all about Boris Johnson and potentially some political risk dialing back a little bit over there as we start to see a future. Well, maybe there could be some tax cuts being talked about. I'm looking at sovereign bonds, though, in Europe actually selling off, and it seems similar here in the US, Taylor.
Indeed, it's yields higher, price lower, Caroline, and firmly back above 3%, as we've mentioned, a 3.02, a 3.04, and a 3% on the 10-year. So you're getting still that inverted 2s, 10s, but a little bit less so, as a lot of the big moves have really come on the long end of that yield curve. Romaine, I'll just pump this on over to you quickly. I-bond sales surging 9.6% in this inflationary environment. So you're sort of getting that safe haven within full faith and credit, but decent yield.
Yeah, everyone keep an eye on a lot of those inflation hedges. Look, it hasn't gone away yet, and we're going to talk a lot, of course, about that jobs report tomorrow. But really, the bigger issue is going to be that CPI report next week and how the Fed sort of puts all this data together and says, you know, what do we sort of give here in order to get inflation under control? Is it that 50 basis points that I think we kind of heard alluded to from Waller and Bullard today, or do they kind of stick with 75 basis points, go big or go home, get this under control, and then maybe you can step back and reassess a few months from now?
Yeah, it's like, I got to tell you, it got a little dark when I was at home with COVID. I was watching Ozark. It was like not a good thing. But I do think about the dealing, right, that the Federal Reserve and those FOMC, meetings, how much they are willing to give up when it comes to the labor market in order to achieve their inflationary goals, right? I mean, that is a tough trade. And you do wonder how much they're willing to put pain on basically U.S. citizens in terms of losing jobs.
Well, but I thought it was interesting. One of Waller's comments was the idea that inflation is basically a tax on these people as well. So I think that's part of the balance here. And I think Powell said something similar, that you can't really, there's a strong job market, doesn't matter if you got 8% inflation.
Do you feel better out of work, or do you feel better having a job but paying higher prices?
That's a great point.
Well, that's why in a week we're going to be talking.
And I don't say that a lot, Carol.
I know. I'm like, oh my God, do I just need to get COVID twice to get that?
No, please don't.
Yeah, please, no more. Romain, you made the good point about not, looking too much at one data point, the one we get tomorrow when it comes to payrolls. But that's why it's important next week for us to keep a focus on bank earnings and when we start to hear from banks, because they've got such a good idea of how much cash the consumer has, what their spending has been, and how their consumer habits have changed over the last 3 months as a result of inflation. So I expect we're going to get a lot of news from those companies when they start to report.
And the Bank of America are already giving us that data a little bit today in terms of the resilience of credit and debit card spending. We'll look to the Wells Fargos, the more focused on retail spending. It's interesting also, mortgage rates sort of coming down significantly today, but what does that mean overall about buying strike, or indeed what actually people are willing to do in terms of purchasing homes at the moment?
Little bit of a buyer strike. I think we had a great chart earlier showing the massive negative correlation as those yields are rising, those new home sales are rolling over. We get to jobs data on Friday, and I think a big CPI again report, I think, coming up next week.
Romain, what did you say earlier to me?
I said that we were getting a big jobs data on Friday, and of course a big CPI report next week. Taylor just kind of tunes me out all the time. I'm used to it, don't worry.
All right.
You didn't take my iBond story, so I'm mad at you.
She's had a few Negronis before the show.
So jealous, so jealous. All right, guys, we got to run. That's going to do it for our cross-platform coverage. Radio, TV, YouTube, we do it all. We'll be back again, same time, same place tomorrow, Jobs Friday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, guys, just want to mention Levi Strauss because the stock is up about 4%, more than 4% in the after hours. Tim, those earnings just coming out. Second quarter net revenue, slight beat, $1.47 billion versus an estimate of $1.43 billion. Second quarter EPS, that was 6 cents better than forecast and still sees fiscal year adjusted EPS $1.50 to $1.56.
Okay.
Estimates $1.55. This is going to be so important moving forward, what companies have to say about the outlook and their forecast for the year.
Yeah, also eager to hear what the company says about the mix of products. Are people trading down like they've been doing in recent months, as we heard from Walmart just a few weeks ago? Let's get to world and national news now in Washington, D.C. Here's Nancy Lyons.
Thanks, Tim. Former Minneapolis police officer Derek Chauvin, who was convicted in the death of George Floyd, well, he has been sentenced to 21 years in federal prison for violating George Floyd's civil rights. In announcing the decision this afternoon, the judge said Chauvin's conduct was wrong and offensive and said he was puzzled by what he did. President Biden today awarded the Medal of Freedom to 17 Americans of achievement, including athlete Simone Biles and Megan Rapinoe, actor Denzel Washington, and former legislators Alan Simpson and Gabby Giffords.
President lauded the well-known and those less well-known, including civil rights activists and a COVID intensive care nurse.
The idea of America, a cause of freedom, shines like the sun to light up the future of the world. That's the soul of our nation. That's who we are as Americans. And that's what we see, an extraordinary group of Americans up here on this stage.
The awards were posthumous for Labor leader Richard Trumka, Senator John McCain, and Steve Jobs, founder of the Apple Company. In Washington, Irv Chapman, Bloomberg Radio.
In Russia, American basketball star Brittany Griner has pleaded guilty to carrying cannabis oil. Griner was arrested in a Moscow airport back in February, and authorities said she was carrying 2 vape cartridges. Alexandra Boykov is her attorney.
She's a responsible person, and she admitted that it was hers, but she said that it was unintentionally brought to Russia.
Boykov says they're hoping for a more lenient sentence than the suggested 10 years. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Just want to rehash, just because it just crossed a few minutes ago, those Levi results. Stock still up about 4% in the after hours. And the big thing is, Tim, reaffirming its annual guidance for revenue and EPS, right? So that's a big deal. That plays into the consumer and the retail market, both which can be very tricky, especially if you're expecting a recession.
Yeah, that's why it's going to be key to listen to the executives on the call. And I imagine that analysts will be asking about that product mix. And if people are, because Levi's does have a range, Carol.
I agree,
It does have some stuff that's at the lower end. Like we spoke to the CEO of the parent company, Contour Brands, of Lee Jeans and Wrangler, who told us just a couple weeks ago that he's pretty optimistic because he is able to appeal to customers at different ends of the economic spectrum.
Yeah, no, I agree with you, right? Like you want to understand how are consumers maneuvering, through higher costs? What are the trade-offs they're making, the decisions? You and I both have traveled a bunch in the last couple of months. It does feel like people are out there traveling. I have family members who are planning trips, extended family that haven't been traveling in a long time. So that is certainly something people really want to do. In the meantime, do people really want to still buy homes? And that is certainly something that we just talked about with our TV colleagues. We do see 30-year mortgages whipsawing in recent weeks, first posting their biggest one-week increase since 1987. That's massive. Then slumping the most since 2008. And so, if you're a homeowner or looking to buy into this market, like, do you try to do it and get it done because you're worried about rates going higher, or do you wait because you're thinking they might come down a little bit more?
Yeah, it's pretty remarkable to see the way that mortgage rates have moved in recent months. Some people were tweeting a few days ago about this, Carol, being able to lock in a sub 3% interest rate in like December of 2020 as rates just fell. Being able to do that, and some people locking in, sub 3% for a 30-year fixed, which, are we ever going to see that again? Probably. But in the greater scheme of things, this isn't that high, Carol.
No, exactly. Historically, right?
Yes.
So you got to have it all in perspective, everyone. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with that earnings beat out of Levi Strauss. Second quarter numbers came in better than Wall Street's expectations as the denim maker boosted profit by selling more apparel through its own stores and website. After hours, we do have Levi Strauss shares advancing now by just about 4.6%. U.S. stocks higher for a fourth straight day on optimism that the Federal Reserve will be able to curb inflation without tipping the U.S. economy into a recession. We had stocks closing close to session highs today, with the S&P up 57, up 1.5%. The Dow up 346, up 1.1%. NASDAQ today up 259, a gain of 2.3%. 10-year yield 3.00%. The 2-year yield 3.02%. Gold up $1.83 the ounce to $17.40, up 0.1%. West Texas Intermediate crude 102.33 a barrel, up $3.80 the barrel, up by 3.9%. The big story, though, perhaps natural gas surging 12.8%. Nat gas at $6.21 per million BTUs. So again, recapping the Dow, the S&P and NASDAQ all higher. S&P up for a fourth day today. S&P up 57, up 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. Well, as you know, Wells Fargo has been dealing with a series of scandals and regulatory issues for years, and it's operating under a growth cap imposed by the Federal Reserve. Well, last week, we even had Congresswoman Maxine Waters say that the bank should face an investigation by U.S. regulators into allegations that the bank denied Black refinancing applicants and hosted mock interviews to fulfill diversity numbers. To be fair, two sides to every coin. We should point out that Wells Fargo, Tim's been working to make some changes, including awarding a $40 million grant to help cultivate diverse housing developers.
We've got with us Gina Merritt, who's principal at Northern Real Estate Urban Ventures. It's a community development organization that's engaged in a holistic approach to real estate development. Gina joins us from Washington, D.C. Gina, how are you?
Fine, thank you. How are you all doing?
We're
today?
doing well. Thanks so much for joining us. Talk to us about how you're going to use this $40 million grant. It's called Growing Diverse Housing Developers.
Well, the funds were awarded by Wells Fargo to 3 regional CDFIs, Community Development Financing Institutions. And they have selected a cohort of 27 diverse developers to provide funding support both for their enterprise as well as their real estate projects.
Well, and talk to us about a little bit about what kind of impact this could do, the money itself, in really changing the system. And I know, Gina, you know, I kind of laid it out because Bloomberg viewers, they know Wells Fargo. There's been a lot of, you know, things that they have been grappling with on many different levels. And they're not alone in terms of the banking society and banking industry in leaving out, you know, minorities and being more inclusive, especially when it comes to housing. So tell us how you think this money can help move the needle.
Well, this money is certainly going to help my organization. I've been in business for more than 20 years and have more than 27 years of experience developing affordable housing for other people, never having enough capital to be able to develop my own projects. And so the funds Wells Fargo has provided will allow me to, one, leverage their grants to hire people and to support my balance sheet. And it will also allow these CDFIs to create products that will help diverse developers develop their projects. It's been very challenging going to conventional banks to try to get funds, both early funding, the early stage funding for development projects, as well as construction and permanent financing. So this program helps provide the kind of support developers need in order to get their projects done on their own.
If I can just use the word challenging, it's got to be even harder than challenging, right? Is it fair? Yeah. Okay, because we've reported on it a lot here at Bloomberg in terms of the financial sector really turning its back on a more inclusive, sect, if you will, within the housing markets.
Listen, I was almost put out of business actually by one of these large institutions I was working with a smaller institution that was bought by a larger, brand name financing organization, and that organization would not honor the deal that the smaller organization made to me, right? A smaller financing entity. So the 8,000-pound gorilla basically took over this company and wouldn't honor the deal, almost put me out of business. Wow. So we need organizations like Wells Fargo to fund these CDFIs that will provide financing for people like me, because the major institutions won't do it.
Gina, how do you build affordable housing right now? I mean, construction costs are high, materials costs are high, land is high, interest rates are going up. How do you do it?
It's very difficult. I mean, I have a couple of projects right now in development that are about to close that just experience these kinds of things, both an increase in interest rate and an increase in construction costs. And, I would say luckily, there was also, luckily and not so luckily, there was an increase in the rental rates, because HUD issues new rents every year for affordable housing developments, and those too went up. So that helped absorb some of the increase in interest rates and construction costs, but not all of it. So then what you have to do is really go back to these municipalities that provide what we call gap funding, which is, all of the private money you can get, all of the low-income housing tax credit investment you get. There's usually still a gap, right? There's still some chunk of money that the private institutions can't fund. And so really what we look to now is those states and cities to provide additional support to these projects so that they can get them done.
Is this about also, Gina, creating projects, if we're going to really embrace as a world diversity and inclusion, that means these kind of projects in maybe a traditionally white neighborhood. Is that part of this?
Yes, especially in the District of Columbia, actually. Basically, the financing programs that support affordable housing give you a higher score if you're in a neighborhood that has higher incomes. And so, that just happens to be, neighborhoods that are whiter in terms of its population.
Right. I just think about if we're really going to, be all in. Go ahead, Tim. I know you want to jump in.
Yeah. I just want to ask Gina where you're most optimistic right now, because there is such a housing crisis. We just have 20 seconds left.
Sure. I'm working in 3 markets, which I'm very optimistic about: Cleveland, DC, and Maryland, because the leadership in all of those places understands how important affordable housing is, and they are investing tens of millions of dollars of resources into affordable housing. So that means good things for people like me, because I'm working in communities that look like me, and these leaders are willing to invest in them.
Well, Gina, come back. Let us know how things are going. Gina Merritt, principal at Northern Real Estate Urban Ventures, joining us via Zoom from Washington, D.C. Looking forward to hearing more. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C.
Connection
Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com.
Connection lost.
This is Bloomberg Business Week.
You are listening and watching Bloomberg Business Week on this Thursday. And coming up, I feel like this is going to be a story that's a sign of the times, Tim.
Yeah, we've been continuing to cover the aftermath of the Supreme Court's decision to overturn Roe v. Wade. We've got a great tech angle on this, talking all about what tech firms are bracing for when it comes to the legal mess of abortion data subpoenas. We're going to be doing that in just a minute. First, though, let's get back to markets because, Charlie Pellet, there's a lot of after-hours action.
Indeed, and I got to begin with Levi Strauss. You guys watching that stock after hours? Look at it go, up 8.1% right now. Second quarter earnings beat Wall Street expectations as the denim maker boosted profit by selling more apparel through its own stores and website. This is key because Levi says direct-to-consumer revenue, which is generated by its own stores and website, rose 16% in the period. That segment of revenue now makes up 37% of the total. But worth repeating, after earnings, Levi soaring after hours, up now by just about 8%. U.S. stocks rallied for the fourth straight day on optimism that the Federal Reserve will be able to curb inflation without tipping the economy into a recession. Brad McMillan is Chief Investment Officer at Commonwealth Financial Networks, and he was our guest right here on Bloomberg Business Week. And indeed, stocks rallied as a result, with the S&P up 57 points today, a gain of 1.5%. S&P at 3902. The Dow up 346, up 1.1%. NASDAQ up 259 points, a gain there of just about 2.3%. So again, recapping, an earnings beat out of Levi, up more than 8% after hours. S&P up for a fourth day today, up 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thank you so much. Charlie Pellet there with that update. Well, as I said before, in another story that is definitely a sign of the times, tech giants such as Apple, Microsoft, and Google, Tim, they're bracing for a legal nightmare thanks to abortion data subpoenas.
The story written by Dina Bass and Mark Bergen. Dina is joining us now. She's Seattle Bureau Chief for Bloomberg News. She joins us on the phone from Seattle. Dina, really good to have you with us. You and Mark write about this hypothetical situation here that is, as Carol mentioned, just a absolute sign of the times. Take us through that hypothetical situation as an illustration of what tech companies have about what we're searching for online.
Sure. Thanks for having me. So what's going to end up happening here is that you have to take a step back even before we get to the hypothetical. So what's different now than in the pre-Roe era is that everybody has this huge volume of data that's being collected on them by various apps and tech companies. And different bits of that data is just a trove of information that could be used as sort of a digital trail of breadcrumbs that could link a patient or someone who assisted in an abortion or a friend of a patient to the termination of a pregnancy, which is now being restricted or outlawed in multiple states. So think of it this way. So if you have a woman in Texas and she's searching for an abortion pill, she buys it from a New York pharmacy. So you may end up with a situation where Google has a record of that web search, and maybe the receipt lands in a Microsoft email inbox. And so Google's based in California, Microsoft's in Washington, but they have data centers all across the country. So the digital records may be in completely different states. So we're already talking about 4, 6, 8 different states, which may have different laws about whether abortion is legal or not, whether data, personal data can be shared, whether you can prosecute out-of-state abortions. So the question for these tech companies is going to become, what happens when law enforcement or a court come to them with a subpoena or a warrant asking for that data? Whose state laws, take precedence?
So we don't, Dana, just have to kind of speculate, right? This has happened before where some of the tech giants have been, asked by government or subpoenaed or other law enforcement coming in and saying, hey, turn over different kinds of records. So how does the past maybe help us figure out how the future, especially when it comes to abortion, play out?
Absolutely. And that actually happens tens of thousands of times a year for each of the big tech companies. They publish every 6 months a transparency report about data requests that they've gotten. And these sometimes come from for national security, for criminal matters. And what has happened is if you look at many of the big tech companies, they do comply with the majority of these requests. At the same time, there have been some high-profile cases. Apple comes to mind with the San Bernardino shooter's iPhone, and Microsoft comes to mind with a case that they took all the way to the Supreme Court, which had to do with some email records belonging to an alleged Irish drug trafficker that were stored in Ireland. And they did fight those cases. What we don't know this time with the abortion cases, and we're waiting to hear from these companies, is some sort of comment as to whether they will comply with those requests, whether they will fight them, whether they will consider the fact that an abortion has happened a valid criminal occurrence such that they have to hand over data to law enforcement, or whether they'll fight.
What about the approach of just not collecting that type of data?
So that is definitely an option in some cases. Google came out last week saying that it's going to automatically delete location tracking records of user visits to sensitive places, and it included abortion clinics in those sorts of sensitive places. And Apple has some limits on what it collects in its, personal health data, and also what sort of data gets encrypted. Because in that case, companies can say, "Look, we don't have access to that data. It's encrypted. You've got to get it from the user." But, there's also situations where you want data to be retained. I mean, think about healthcare records, right? So a lot of healthcare companies are increasingly moving into the cloud. They're moving into the cloud with Microsoft, with Amazon, with Google. That's data that's online. Now, a patient may think, well, isn't that data protected by HIPAA? But, there's also questions there. There's, varying state laws on the privacy of healthcare data. There's HIPAA. HIPAA protects only health plans and care providers. Some of the lawyers that I spoke to said that it is probable that it also protects the cloud computing providers that store that data for health plans. But a court order signed by a judge could permit a HIPAA entity to provide the data.
So,
and you could also challenge the order.
Dina, I feel like there's so many questions out there, and I feel like we're just going to see, and I think you guys think you have a quote in your story that just get ready for years of litigation as we try to figure out our way forward on this.
I think that's right, and and that's what we heard from the Electronic Frontier Foundation. From Corinne McSherry, years of litigation. There's not a lot of precedent here. We also will be waiting to see what states that want to protect data privacy and women's privacy do. We've seen Washington State, California, I believe yesterday Colorado as well, trying to block state entities from giving up medical records for out-of-state investigation.
Right. Dina Bass, Seattle Bureau Chief for Bloomberg News, joining us on the phone from Seattle. Everyone check out her story. Tech firms brace for legal mess of abortion data subpoenas. Bloomberg Business Week is brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com.
All right, right now, let's get back to world and national news. And Nancy Lyons, she's in Washington, D.C. Hey, Nance.
Thanks, Carol. A federal judge has sentenced Derek Chauvin to 21 years in prison for violating George Floyd's civil rights. That extends the prison term the former Minneapolis police officer is already serving for his murder conviction in the death of Floyd in May of 2020. Chauvin, who is white, killed Floyd when he pinned the black man to the pavement for more than 9 minutes as Floyd pleaded he could not breathe. Ramesh Sunny Balwani, the former president of Theranos and ex-boyfriend of its founder Elizabeth Holmes, has been found guilty of fraud for his role in the collapse of the $9 billion blood testing startup. Today's decision comes 6 months after Holmes was convicted of defrauding investors in the company. No sentence yet, though, in the trial of WNBA star Brittany Griner, but today she did admit guilt in a Russian courtroom. She is on trial for carrying an illegal substance through the airport. She told the court she was rushing to pack and put vape cartridges in her suitcase, but never intended to break the law. U.S. Embassy spokeswoman Elizabeth Rood says she spoke with Griner today.
Under the circumstances, she is doing well. Most important, I was able to share with Ms. Griner a letter from President Biden, and Ms. Griner was able to read that letter.
Rood says the Biden administration remains committed to getting all detained Americans back home. Macho leading man James Caan has died at the age of 82. One of his most iconic roles was as hot-headed Sonny Corleone in The Godfather.
What do you think this is, the Army where you shoot them a mile away? You got to get them close like this. Bada bing, you blow their brains all over your nice Ivy League suit.
Khan's family provided few details in announcing his death. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in D.C. How many times do you think, like, guys quote, bada bing, like that line?
Okay, so you don't know this because you can't see the control room right now, Carol. You and I are separated due to health protocol reasons, so because we're staying safe, even though, I guess...
Is this a Paul Brennan thing?
Yes, he called it. He had just played that line that Nancy played for Ari. And when he heard it, when he heard Nancy play it, it was a great reaction.
All right, we women, we know, right, how guys like to quote, you know, lines in Anchorman and I don't know, other...
I don't know where you're going with this. I just want to talk about Elon Musk.
I'm just saying, but you know that this is a line that guys like quote, bada bing, like all the time. All right, so I don't know if Elon Musk quotes it, but man, he definitely knows how to reach out to the people.
Yeah, check this out. Elon Musk getting regulators to get a bit of, email messages. U.S. regulators received more than 90,000 messages after Elon Musk's Starlink, that's the satellite firm that was once part of, well, it is still part of SpaceX. Yeah. He asked subscribers to rally to his side in an airwaves dispute with Dish Network.
All right, so let's lay it out. At issue are frequencies that Dish wants to use for fast 5G service. And we've talked about stories about, like, did 5G really do what it's supposed to do? Okay,
no.
That's an aside story.
No, is the answer.
Musk SpaceX said the proposed service would block signals from his Starlink fleet of satellites, which offers wireless broadband through small antennas mounted on rural homes and businesses. Dish said its 5G won't interfere with Starlink. So then, today, a coalition that includes Dish pushed back against Musk's campaign, saying Starlink has initiated a public misinformation campaign by falsely telling customers and the public that coexistence is not possible. Nonetheless, regulators are just getting tons of emails because people are, I guess, siding with Elon.
Yeah, the FCC is weighing the issue. It hasn't indicated when it may decide whether to open the airwaves to 5G use. Carol, Elon Musk has 100.5 million followers on Twitter.
What's interesting is the FCC had received about 200 submissions as of early last week, and the number grew to more than 95,000 by midday today. So, gotta love it when Elon calls out.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Headline from the Bloomberg Professional Service: Elon Musk's deal to buy Twitter is in serious jeopardy. This, according to the Washington Post, it says Musk's camp cannot verify Twitter's spam numbers. So again, we've got Twitter shares lower by 4% after hours. Repeating the headline on the Bloomberg Professional Service right now: Elon Musk's deal to buy Twitter said to be in serious jeopardy. This according to the Washington Post. Stocks rallied today as Fed hawks downplayed recession fears. U.S. stocks higher for a fourth straight day on optimism that the Federal Reserve will be able to curb inflation without tipping the economy into a recession. So a day ahead of Jobs Friday, we had the Dow, the S&P, and NASDAQ all rallying, closing close to session highs. S&P up 57, a gain of 1.5%. Dow Industrials up 346, up 1.1%. NASDAQ up 259, a gain of 2.3%. 10-year yield 2.99%. The 2-year yield 3.02%. Spot gold up $1.50 the ounce to $17.40, up by about 0.1%. West Texas Intermediate crude today up 3.9%, $102.32 a barrel. Again, we've got the Dow, the S&P, and NASDAQ all advancing for a fourth day. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And once again, I do want to point out that Twitter shares, as Charlie mentioned, down about 6%. That headline from the Washington Post: Elon Musk's deal to buy Twitter in serious jeopardy. So we'll continue to follow that as more is known. All right, right now, though, Tim, we want to get to one of today's chronic and problematic stories. It is about our supply chains.
Yeah, let's get into it with Drew Wilkerson, president of North American Transportation for XPO Logistics. It's a publicly traded firm on the New York Stock Exchange. Drew joins us on the phone from Charlotte, North Carolina. Drew, how are you?
Hey, Tim, I'm doing great. Thanks for having me.
Hey, well, we want to talk to you about the spin-off broker transportation company that you're going to be CEO of. But first, I want to get an update from you on the state of logistics and supply chain right now. Just give us an idea of where we are right now compared to where we were, let's say, 3 months ago.
Overall, over the last 3 months, there hasn't been a ton of change in the market and the demand that we're seeing from our customers. If you look at what we did when we reported out in the first quarter for our tech-enabled truck brokerage platform, volumes were still strong on a year-over-year basis, and we're up a decent amount, and that continued into April. And we expect to have a strong second quarter overall. You're seeing different things from different customers. You've got some customers whose supply chains are running extremely smooth. We've got customers that have goods at the port of Shanghai that are still waiting to get over to the U.S., so we know that will hit the transportation market in the near future. And then we've got some customers who obviously have an influx of demand on their product.
Help us out in terms of your business. How much visibility you really have about what's to come, let's say, in the next 3 to 6 months?
We've got good visibility over what's going to come in the back half of the year, and that's because we've got a very diversified book of business. We're not too heavily focused into one sector. We're heavy into food and beverage, retail and e-commerce, industrial, manufacturing. So we've got good visibility as our contracts are typically on an annual basis and strong relationships with our customers.
How should we look at logistics in the context of the health of the global economy and the health of the U.S. economy? We're always looking for alternative data to give us an idea of how the economy is doing. So help us understand that with logistics.
Again, Tim, our business right now is performing extremely well.
So no concerns. You don't see anything there that would concern you about a recession?
You're seeing different things from different customers overall, but if you look at our volumes in our truck brokerage group, they're still up on a year-over-year basis overall.
Wow.
Okay, so that's interesting. In terms of the supply chain problems, though, the snarls, do you see any sign that is kind of working its way out?
the freight transportation market is something that's always been dynamic and something that we embrace. If you look over the last few years, there's been a ton of disruption in supply chain, and that's why customers are leaning in to companies like XPO who have massive amounts of capacity and they have best-in-class technology.
Interesting.
All right.
Go ahead, Carol.
Is it all rosy? Come on, Drew. We've been covering this. It's not so easy. I go to the stores and there's still empty shelves and, you know, we're
$40 from Mucinex?
Exactly. I mean, that was crazy.
Well, we don't set the price on Mucinex, Tim.
No, I know, but let's be real. Like, you know, we still have problems. We know things have eased, and we've talked to a lot of CEOs about that. But, you know, let's be real about in terms of what are the problems that still exist.
Yeah, so as you look, Carol, there's a number of things that differ, and it varies from vertical to vertical. Again, we've got some verticals that are performing extremely well, and then, you know, I think it's been well documented that in some of the retail sectors that there is, you have some of the supply chains that have more than enough product to ship out on that basis. But on a whole, our volumes are still up on a year-over-year basis.
Well, let's talk a little bit, Drew, about the spinoff here, because I know that XPO is right in the middle of this spinoff that is going to create two standalone publicly traded companies. And you are going to oversee one of them, the tech-enabled brokered transportation company. Give us the details there. What does that look like? And why a spinoff?
Yeah, so when you look at what we're doing, we're going to create two pure-play powerhouses. We're going to have our less-than-truckload LTL group that is the nation's third largest less-than-truckload provider. And we're also going to have our tech-enabled truck brokerage platform, where we are the fourth largest truckload broker in the country today.
Okay, so I guess I'm just trying to get an idea. You do sound very optimistic, which is a good thing. And we have heard people say that, you know, some of this we're getting ahead of at this point. So, I mean, when it comes to, as you guys are spinning off businesses, I mean, what is it that's tricky about the next 6 to 12 months here, in your view?
Well, both businesses are performing extremely well right now. So the biggest thing that we have to do is we have to make sure that the people that we're bringing into the organization match the culture that we've got. So when you look at the tech-enabled truck brokers platform, our team has been together, vice president level above, for over 12 years on average, and director level and above is over 8 years on average. So we've got to make sure that we keep the same continuity as we look to bring in some outside hires, but also bring in a group that can add to us and look at things and help us grow to the next phase over the next 10 years so we can grow at the same rate that we've grown, over the last decade. If you look at what our tech-enabled truck brokerage platform has done, over the last 8 years, we've grown at nearly 3 times what the industry's grown at.
Right, right. And it is all ultimately, you'll hear it from other leaders too, that it comes down to teams and people to really kind of maintain their growth going forward. Drew, thank you so much. Drew Wilkerson, president of North American Transportation at XPO Logistics, joining us on the phone from Charlotte, North Carolina. Hey, we just want to go back to those headlines that crossed involving Twitter, because, Tim, Twitter shares are down almost 5% in the after hours.
Yeah, this coming from the Washington Post. Musk's deal to buy Twitter is in serious jeopardy, according to the newspaper. They cited 3 people familiar with the matter. According to the Washington Post, Musk's team decided that Twitter's figures on spam accounts are not verifiable. This is an issue that Elon Musk has raised in the past, although many observers have said, is he just using this as an excuse, given that he knew likely about these spam figures before?
Yeah, Dow Jones also coming across Twitter layoffs affect fewer than 100 people. Twitter laying off 30% of its talent acquisition team. Listen, we're going to hear from Elon Musk at Sun Valley on Saturday, so it'll be curious to see, does he talk about this deal? Does he tie it up? Does he walk away? Like, who knows? But nonetheless, Twitter shares, which had rallied today, down more than 4% in the after hours. Hey, good to be back. Don't go anywhere. Don't go anywhere. Don't get sick.
We'll work on it.
All right, for Tim Stanovic and the whole Bloomberg Business Week team, have a good and safe evening. This is Bloomberg.